How many of you here likes gold in general? Wow, are you guys in the right seminar or in the wrong seminar? Okay. How many of you loves gold? Let me try. Wow, only 50%. The other 50% don't like gold. Don't worry. If you don't like gold, we hope at the end of today's seminar, we hope we can convince you. And obviously, Mr. Fong, okay, from Ace Capital, hopefully he can give us some free gold today. Any of you like free gold? Finally, some good response. Okay, just before I start, let's give yourself a round of applause because you guys can make it so early in the morning, you know, especially on a Saturday morning where we can do so many other things. Okay. Now, just like to set a context for today's event. I think clearly, how many of you here heard before the FGLD, the Bursa Malaysia Gold product? Huh? Only a couple of you. Wow, then our job today will be quite tough. Okay. I believe some of you have the FGLD contract brochures. If you don't have, please get it from my colleagues outside. I think that's like almost similar to a paper gold. Okay, the best similarity. Now, just to set the context right, you know, any of you here, I believe some of you have already tracked the gold market. You have seen how the prices has moved. You know, gone are those old days whereby you still can shout, "Wait, is gold going to hit 2,000?" You know, now I think gold has plunged quite tremendous for the past couple of years. Only in recent times, it has started to consolidate a little. Okay, so just setting on that context, we are very grateful to Bursa to host this event. And we also like to thank Ace Capital, especially Mr. Kim, which is sitting behind there. He looked a bit nervous, so during my presentation later, let's give him some support. And Mr. Fong, the Chief Marketing. Okay, without Ace and without Bursa, I don't think this event can be that successful. Okay, so without further ado, I'd like to invite Mr. Andrew, Vice President of Investor Development from Bursa Malaysia Derivatives, to start the event. To you.
Good morning, everybody. My name is Andrew. I'm from Bursa Malaysia Derivatives. Some of you who have seen me during some of our other seminar. Okay, some of you may not. Welcome to Bursa on a Saturday morning. We would like to share with you. Actually, today I'm not supposed to do this presentation. If you look at the agenda, it's my colleague, Morazi. Even though he's half Chinese, I'm Chinese, but I don't look like him, okay? I just want to make sure you all don't consider me as Morazi. My name is Andrew. He's away today because he has something urgent that prop up in the office that he need to attend to. So I'm taking his slot today. So, okay. I'm supposed to give the opening remarks, but I'll also continue with the presentation as well, okay? I think David have shared with you where are the toilets. Is in I think one of the things that everybody want to look for important is the toilet. Okay, it's at my left hand side, which is at your right hand. Okay, it's at the door there. There's a red sign there. Okay, you just go out there. There's water behind. If you need any water, just go to the behind the next room. So without further ado, because I'm supposed to start at 9 o'clock, now it's 9:30, so we are going to try to catch up a little bit. So without further ado, I'm going to start with my presentation. Okay, first thing is, just now David asked, anybody know what is FGLD or Bursa Gold Futures? Most of you would not know, okay, because gold futures is not something that is traded widely in Malaysia. If I talk to you about crude palm oil, futures on crude palm oil, most of you may know. And futures on indices, you all will know, but not this FGLD, okay? It was launched in 2013, but the liquidity is not there because not many people still comfortable trading paper gold in futures, okay? So let me explain a little bit what is FGLD. It's a contract with expiration. That means it's a futures contract with expiration. There's an expiry date to the contract. Okay, for example, September 2017, it will expire. So what most of the people will ask, what happens if the contract expires? I have a position. Then it's not physically settled, it's cash settled. So at the end of the expiry, or at the expiry of the contract will be cash settled. So whatever extra you make, you can get it in cash, or extra that you lost, you have to pay it in cash. Okay? It's not physically settled. So you won't, at the end of the contract, get the gold, physical gold. Okay? Or you do not need to deliver physical gold. It's all paper. So paper gold. It's cash settled against LBMA fixed price. LBMA here is London Bullion Market Association price. So it's an international pricing. So it's not made up by Bursa or made up by anybody. It's an international pricing. It's only available through our broker. Philip today is here. They will help you to open an account. Number 5 is marginable, 4 to 5% of the contract value. Later, I'll share with you in more detail what does this mean. A lot of people don't understand this, okay? And it's daily mark to market. So every day you will know whether you make money or your position is a losing position, okay? And more importantly, if you trade with Bursa, means you are trading in a transparent and regulated environment, because Bursa is regulated, okay? Regulated by Securities Commission. So no worries. I'm going to run through the contract specs. The contract spec is in the brochure, but I'll just run through very quickly. The underlying asset is a gold assay to a minimum of 995 finest. So just now I've shared with you the settlement method is cash settled. Okay. The contract size is 100 grams. That means whenever you buy one contract of FGLD, it's equivalent to 100 grams of gold. Okay? Any questions so far? If you have any question, do stop me and ask the question. Okay? And the price quoted is in ringgit per gram. The next thing is the minimum price fluctuation. Every one tick is 5 cents per gram. So if you calculate, since it's 100 gram, every tick will cost you 5 ringgit, up or down. So if you move by one tick, you make 5 ringgit. If you move down by one tick, you lose 5 ringgit. So the movement is quite small. The reason why we created a 100-gram contract and not a 1 kg or a 10 kg contract is to cater for retail. Okay? Because we understand that if you want to start trading futures, this is a very good contract to start learning futures, because it's a very small contract. Our palm oil contract, one contract is about 65,000 ringgit. Okay? Whereas this is only 17,000. Okay? It's quite small. And our indices is even higher, because now it's about 1,008. 1 point is 50 ringgit. It's about 90,000 ringgit, one contract. This is only 17,000. Okay? The price, daily price limit, usually 10%. Gold price don't move one day 10%, unlikely. So this is something that is there. The speculative position limit is 25,000 contract, which translates to about 2.5 tons. So none of us will hit that position limit. This is more for corporate. Okay. The trading hour is Monday to Friday. Morning is 9 to 12:30. Afternoon is 2:30 to 7. The contract month. Okay. What does the contract month means? How far you can trade. You can trade up to 1 year ahead. That means you can actually, if there's prices there, you can actually buy gold 1 year ahead, the price. That means the gold to be delivered next year, or contract that expire next year. So you can trade quite far. Okay? The final trading day is the last business day of the spot month in both London and KL. So the end of the month, the last business day, there has to be working day for both KL and London, because we are using a London fix. Okay? The final settlement value, this is how to convert into ringgit from USD, because LBMA is quoted in US dollar, so we have to convert into a ringgit, okay, to create a value for FGLD. Okay, this is the gold price since 1980 to 2017. If you look at it, from 1980, from this chart, 1980 to year 2000, the gold price actually doesn't move much, okay? Since 2004, then you can see the price start to shoot up and people are more interested in gold, okay? Now a lot of people trade gold. But at the same time, because a lot of people trade gold, there's a lot of scam that has been going on. So later I'll just remind you all, don't trade through the scam, and those people who are giving you high promise of return, it doesn't work, okay? This is the FGLD settlement price. If you look at it from 2013 to 2017, the price has been going up. It's on the uptrend. Whereas if you look at the previous chart, okay, the previous chart, you can see that in 2013 to 2017, at the end there, the price actually doesn't correlate with the FGLD price. Okay, one reason is the previous chart was in US dollar. Okay, whereas this chart is in ringgit. There's another element that have impact on the gold price in Malaysia, is the ringgit. If ringgit continue to weaken, the gold price will ultimately go up. Whether international price remains stagnant or go up, our price will go up, because when you convert from US dollar to ringgit, automatically it will go up. Okay, anybody don't get what I mean? Okay, so I'll continue. If you look at it, the COMEX price and the FGLT price are very, very near. Okay, so if you want to trade gold, you do not need to go to Chicago to trade. You can actually trade FGLD in ringgit. Okay, after conversion, both prices are very, very near. Okay, I've give you an introduction on FGLD. But the most important thing is why people want to trade FGLD. That's the most important thing, okay? What you can do is, these are some of the features of FGLD that you can look at. You can use it to hedge against physical price movement. Later I'll show you some example. You can do shorting. Shorting is something that not many Malaysian investors know how to do. Because if you invest in the stock market, you cannot short the stocks. Short means sell first. You don't have the stock, you go and sell first. Or you don't have the gold, you go and sell first. Can you do that? Unlikely. It's like you go to Pokong, you tell them, you know that the gold price is coming down. You go to Pokong and say, I want to sell to you first lah. I don't have gold, but I sell to you first. Would Pokong take this kind of thing? They won't. Not unlikely, they won't. They'll ask you to go home. Okay, you can't. But in FGLD, you can. In futures, you can. Okay. Number 3, leverage 4 to 5%. I'm going to show you example of what this means. This is something that is the power of futures. It's leveraging. We have very competitive price from the market maker. This means the spread between the buy and the sell are very, very near. Okay, that's the cost. So when the price is very near, that means the price from the market maker are very competitive. You are trading on the volatility of the gold prices. You are not buying the gold. Okay, because this is not taking full delivery of the gold, and your outlay will not be full. It's just based on margin. Okay. And lastly, it's quoted in ringgit, so you won't be exposed to currency risk. Okay, this is the section where I'll give you some example of FGLD trading. Okay, the first question, what to do when gold price drop? You can either rush to the goldsmith or gold shop or to queue, because everybody is going there, to queue and buy, or you can have another choice, long the FGLD. Okay, so you can go to Philip and tell them, instead of going to the goldsmith or whatever to go and buy, you can just call Philip and say, I want to long FGLD. Okay, so you want to buy 100 grams, just get 1 lot. If you want to buy 1 kg, it's 10 lots. Okay? This is something more interesting. Let's say you know that gold price is going to drop. What can you do? If you have no gold, you can't go to the goldsmith and tell them, I want to sell gold to you without any gold. Or you actually have gold, but once you sell the gold, you are actually not profiting. You are taking your profit. You can't profit from a downtrend just by liquidating. It's like you already bought at 1,006. It hit 1,008 and you sell because you know that it's coming down to 1,006. So you are taking up your profit, but you are not actually profiting, okay? Because you already liquidate your gold. So what you can do with FGLD is go and short the market, okay? At 1,008, I don't have any stocks, I don't have any gold. I just sell 1,008. When the price come down to 1,006 and then you buy back, you actually make 200. Okay? This is what shorting is all about, to profit from price dropping. Anybody have any questions on this? This is actually the most powerful tool that you can use in FGLD, besides the leveraging. Okay, it gives you the ability to sell first. In normal gold trading, you have to buy. You can't do a sell first. You always have to start with a long. But with FGLD, you can do a short first. Okay, so if you know that the market is coming down, you can always sell first, buy back at the cheaper price. Okay, I'm going to share with you a slide on leveraging. Okay, how leveraging works. Okay, the first scenario, if you look at conventionally how you trade gold is, let's say you want to buy 1 kg of gold. Now gold is about 170 ringgit. So 1 kg of gold is 170,000. You go to any goldsmith or whatever bank, you say, I want to have exposure of I want to buy 1 kg of gold. So what you need to do is pay them 170,000, correct? Because 1 kg times 170, so it's 170,000. What do you get? You get 1 kg of gold, either in passbook or in physical. But you have to pay them 170,000. But with FGLD, it's totally different how you manage your cash. Let's say you purchase 10 lot of FGLD. 1 lot is 100 gram. 10 lot is equals to 1 kg. But your outlay is only 7,000 ringgit to own that 1 kg gold exposure. Because 1 lot of FGLD, you only need to pay 700 ringgit margin. Okay? So your outlay is 7,000 to the broker as margin, and you still have 163,000 in cash, which you can do. You can put in FD, you can invest in stocks to get return. Instead of just buying a gold and lock the 170,000 there. Okay? This is what we call leveraging, how you manage your cash flow. If you're someone who have a little bit of risk appetite, instead of buying 1 kg, you originally wanted to buy 1 kg. Because of FGLD, you can actually buy 3 kg instead of 1 kg. And you still have money in your hand, you still have leftover. Let's say, for example, you have 170,000, you want to buy 1 kg. But because you trade in FGLD, you buy 3 kg. The margin is only 21,000 ringgit. So you still have 149,000 ringgit capital in your hand. How you utilize that cash in your hand, it depends on you. The most easy way is put that 149,000 in FD. It will give you at least a 3 to 4% return. Okay, and you still have exposure in the gold. 3 kg or more, it's not 1 kg, it's 3 kg. And there are people who are very high risk appetite. Instead of buying 1 kg of physical gold, they can actually go and buy 15 kg of gold in FGLD. Okay, and your outlay is only 105,000 for the 150 lots of FGLD. You still have money in your hand. Okay, this is very powerful. This leveraging is very powerful, but you have to manage your risk. Okay, this can turn around and bite you in your hand. Okay, for example, if you have very high risk appetite, you take 150 lots of FGLD, which is a 15 kg gold exposure. The value of the 15 kg gold is 2.5 million. Okay, but you only pay 105 to have exposure to 2.5 million. What happened if the gold dropped by 5 ringgit? You have 15 kg gold. Okay, it will cost you to lose about 75,000 ringgit. Okay, you only have capital of 65, so you don't have enough money to cover the loss of 15 kg gold. So you have to start liquidating. And that is when people see that, oh, derivatives is bad because it's high risk. Actually, it's not. It's people take unnecessary risks. Give you a layman example. I make 4,000 ringgit a month, example. And I go and apply credit card, 5 banks. One bank give me 5,000. I only make 4,000, but 5 banks give me 5,000, I have 25,000 spending. What I do is leverage on my salary and spend 25,000. All give me credit, so I just spend. But I can't afford to spend 25,000 because 1 month I only can make 4,000. So I owe the bank money. That is, if you overuse or over leverage on what you have, that will happen. They will come and bite you. Similar with this. If you are over leveraging, high risk, if the market turns against you, you will burn faster. And for example, if you are conservative, you only buy 10 lots, which is 1 kg. Unless the gold price drop to 0, then you lose all the money. Because you have to top up, which will never happen. Gold price will never drop to 0. If gold price drop to 0, I think all of us kaput already. Okay? Even 50% gold price drop, also unlikely. Okay? So you can actually use your capital in hand more efficiently if you trade with FGLD. Okay? How you think, how you structure, up to you, but this is some example that we can give you. Okay? Because your outlay, initial outlay to trade FGLD is much lesser. It's not 100% outlay. Any questions before I move to the next session? You all get what I'm trying to bring across is how efficient you can use your capital between when you are buying conventionally or buying through FGLD, the futures, which is translate into the power of leverage. Okay? Okay. I'm going to share with you something what we call exchange for related position for FGLD and how you can use it. Okay? This is very long. It's from our rule book. Basically, what EFRP or exchange for related position means is you can exchange a future position with a physical position with another party. That's basically what it is. For example, if you have buy a FGLD, means you long FGLD, you can go to a third party or someone else, like for example, Ace or Philip, go to Philip, ask them to arrange for you to find a counterparty to take the buy position from you in exchange for a physical, in this scenario for gold. That means you get the physical and you pass the long position to your counterparty. That's basically how it is. Okay? How to use EFRP in gold. Okay? So you have that facility. What you can do is, I give you an example here. Start with buying an FGLD position, a buy FGLD position, and then you switch it to a physical gold position. Scenario, okay, I give you one scenario. There's many. but this is a simple one. Gold price is going to increase. But unfortunately, all your money is in FD or in stock market. You don't have cash in hand. Okay, and you want to, just now the example that I put in leverage is 1 kg gold. Let's say you want to buy 1 kg gold. But all your money, or 170,000, is in the stock market or in the FD. So you don't have 170,000 to straight away get a physical gold of 1 kg. What you can do is start with a FGLD. Okay, you long a FGLD. Before the price go up, you long first. Okay, while waiting for your cash to come back from your FD or from your stock market. So you buy 10 lots of FGLD. It will only cost you 7,000 ringgit and not 170,000. So you can start the position first. Okay? Subsequently, when your FD matured or your stock market has given you the return, okay, you liquidate that position, take the 170,000 from that place and go and do an EFRP. So you will be able to get back a physical, to convert that long FGLD position into a physical position. So you can keep the gold, get the gold through Philip with ACE. Yes. EFRP is when you want to execute. The position is the buy position. Yes. Yes. How it's already yours. You can, when you take the gold, then yes, you speak to Philip, they will explain. No, the gold is yours. Once you pay them, it's you are take the 1 kg gold and bring home. Okay, so no time duration. When you hold a gold, you can hold it for 10 years or 100 years. No, because you already pay them the 170,000 to take. Okay, that's why I'm saying when your return or the FD matured, you want to convert that FGLD position into a physical position. When? I'm not sure when your FD will mature. But you can hold the FGLD position as long as until your FD mature. So keep on rolling that FGLD contract. You already start. Because you already have the exposure of 1 kg gold. The price go up or down, you will benefit. So basically, the FGLD position until when your cash is back. Because you don't have cash to buy, for example, today. I know that the price of gold is going to go up today. Monday. Let's say Monday. All my money is in FD. 3 months later only it will mature. And I don't want to cancel my FD because I already put in for some time. Okay? So what I do is I buy a FGLD on Monday, 1 kg, 10 lots. So 3 months later, when my FD mature, I'll get the interest plus principal. Then I go to Philip office and tell them, help me to change this FGLD position to a physical position. So before you pay them 170,000, you roll for 3 months? Yeah, you roll the contract for 3 months, the FGLD. Okay? Or if you can buy the further month of the FGLD, you can just buy the further month. Okay? Yes? Do you have an example to show us the cost involved? The cost involved? Rolling cost? Yes. I don't, Busa, don't put in the FD return. Okay. Okay. Yeah. Physical gold in itself, there is a cost in the so-called cosmetic manufacturer, which actually is not the same price as the market. Okay, because you see, okay, first first, FD rate it depends on when you lock in the FD rate. 4%. Let's say 4%. Because you are waiting for your FD to mature, you see, to get the money. The 170,000, because your 170,000 which you want to buy the gold is in the FD already. Okay, or you have two choices. Cancel the FD, withdraw it before it mature, which means you lose the 4%. Correct? Or wait until it mature. You have two choices. So what we are telling you is, instead of withdrawing your FD, which costs you to lose 4% of the interest, go and open an FGLD position, which costs you 7,000 ringgit margin to have 1 kg. Instead of paying the goldsmith for whatever, 170,000, come to Bursa, start a buy position, a long position of FGLD, which costs you 7,000. Okay? When 3 months later, when your FD mature, you can always convert this. There's a facility to convert this future position into a physical position. Okay, what is the cost of the conversion? I think you, Philip and Ace would subsequently share with you when the times come. But this is a concept. What is the cost? The cost be, yes, correct. So the cost, but actually if you look at it, the cost to buy the gold, whether today, I mean not the price, the cost, the underlying cost, today or 3 months later is the same. Unless their rate, the arrangement EFRP rate is higher than the market rate, then you are going to lose. If it's on par or below the market rate, you will actually have nothing to lose or benefit. So it all depends on the conversion rate from the paper gold to the physical gold. Okay, this is, I'm giving you a scenario how to use EFRP. If you want to convert back the physical to cash, you just sell back to the broker or the gold, the people who sell you the gold. That's why Philip is in here. Okay, later David will share with you more, from Philip will share with you more how this is going to be done. Okay? Any other questions? Yes. Yeah. Because you already lock in the price. You see, the whole reason to do a FGLD is, to buy the FGLD is you actually have a position to, on Monday itself, on the gold. It's just that it's not a physical gold. It's a paper gold. So when the price go up from, let's say, Monday is, let's say, 107, still 170 ringgit per gram. 3 months later, it's at 200. Okay? Your FGLD position will have make you 30 ringgit per gram. So 100 gram is 3,000. You can use that 3,000, yes? Yeah. Yes. EFRP, yeah. You talk to him, later he will present. That's why he is coming up in a short while. Okay, that's why he is coming up in a short while. I'm telling you that EFRP facility is available. It's already available. Talk to him later, okay? Because that arrangement is by Philip. Okay, if the other broker has contact in the physical market to get you the gold, also can. Yes, EFRP is open to all brokers. It's very widely used in palm oil. Okay, so people can actually exchange their related position from a future to a swap, futures to a physical. It's already there. This is quite some time. It's just that Philip, or one of our broker, Philip, is having a creativity to use this to bring to the gold. Okay? And we have Ace here to help out as well, to provide the gold. You need to get a supplier of gold to make this work. Okay? So just now the question is, from 170 to, let's say, Monday is 170 ringgit per gram. 3 months later, the price go up to 200 ringgit. You already make 30 ringgit per gram from the FGLD. So even though the physical gold has go up to also 200 let's say 170 to 200 as well. You can transfer the profit that you make from FGLD to pay for your physical gold, which at the end of the day is valued at 200 per gram. So this is what you do with paper gold. Okay? remember, on top of the 200 ringgit or 300 ringgit, you make from your FD also. If not, you have to withdraw your FD earlier. Okay? This is how you try to manage your cash flow. Yeah. Because there's margin is your money. Margin is your money, they have to return back to you. Okay? Any questions before I move to the next slide? Okay, this is the example that I showed you just now. If you use the FGLD, EFRP, also similar. Okay? I'm going to end my presentation and pass to Mr. David just after this session. Okay? Before I end my presentation, I will still just remind everybody, if you want to trade gold, trade in transparent and regulated environment, whether with the exchange or with licensed goldsmith, licensed gold trader. Don't simply go and invest in the scam. Okay? Actually, if I'm just doing some social CSR here to tell people, beware of the unsustainable gold scheme and gold scam involving public money. A lot of people, because of greed. Actually, why all this scam works is because of people's greed. Okay? When people tell you, every month I can give you 20% return consistently for 1 year or 2 years, it usually is a scam. No way. Who can give you 20% return in a month consecutively for 12 months? 1 month possible. Even if you trade futures or trade stock, 1 month get 20% return is not difficult or not impossible. But consecutively for 12 months or 24 months or longer, that is unimaginable or near impossible. Even Warren Buffett can't do 20% consistently for 24 months or 12 months. Okay? So when people promise you all this, take worries. Okay? Don't, because of greed, put your money there. At the end of the day, some people, the JJPTR case, put into this month, next month gone. Okay, get zero. So don't driven by greed. Trade things that are regulated by SC, regulated by exchange. Okay, some of this, if you want to see whether that thing is a scam or not, go to Bank Negara website. They actually have published all the investigation that they are doing. Okay, don't just go into it for the sake of getting return. You might get 1 month 20%. If next month they bankrupt or go bust or gone, you lose 80%. Okay? Because you put 100%, you get 20% back, right? The next month, 80% all gone. So you're actually in a losing position. Okay? I'm doing some marketing for Philip before I close. How do I start to trade FGLD? First, speak to our broker. Philip is here, so just approach them to say you are interested to start trading gold futures. Next is get to know the products. We always tell people when you want to trade futures, at least go through and understand the contract specs. If you don't understand, ask them, clarify with them. For example, gold is very simple, it's cash settled. But palm oil is physical delivered. Okay? 1 contract of palm oil is 25 tons of CPO. If you don't understand that and you don't know that, when it expires, the broker will ask you to pay up full amount and they are going to deliver a palm oil to your house. They have to, because it's physical delivered. Okay? Imagine, this is just a joke, but it never happened because the broker will always remind you to close the position before it turns into physical delivery for palm oil. But if it happened, imagine 25 tons of palm oil delivered to your house. What are you going to do? You can't cook it with it. What we ask people, sometimes we joke with the people is, do a swimming pool and pour the palm oil inside, can fill up your swimming pool and you can swim in the palm oil, okay? Because you can't. Okay, so you have to understand. To trade futures, most important is to understand before you even start the contract specs. Okay? See whether it's physical delivered, whether it's cash settled. These are very important. If you don't know the product, don't go and trade it. Okay? Then the third step is open account with them, give them all the documentation, and put in the margin. Put in margin nowadays very simple. Take out the phone, Maybank to you, press, money can be transferred, and you can start trading. So basically, it's very simple steps, and Philip are here today to help you to do all this within a day. Monday, you can put in the margin with them and start trading FGLD. Okay? Basically that, yes, before I got gentlemen here. Who is the market maker for FGLD? We do have market maker for FGLD. One of them is Mr. Fong here from Ace Capital. Okay, they are physical gold trader as well as our market maker. So there will be price there, no worries. So any other questions before I say? Okay, why is it not taking off? There are some, at first we can't get the market maker, okay, it's not easy. And last year, unfortunately, we have the currency issues. The market maker will suffer because as you know, ringgit, you can't hedge ringgit. You can't trade ringgit overseas. You can only trade in Malaysia, okay? So the market maker cost to hedge the ringgit and the US dollar has gone up, or they can't hedge at all. So they are subjected to currency risk. That's why the market maker also give up last time. That's why when there's no prices on the board, there's no trading. The thing is, yes, anyone can be a market maker, but the risk to be a market maker is not no risk. It's not a no risk game. You have to take on some risk, especially the currency part, which not many people want to take. Even the professional market maker are not willing to take because you can't hedge the ringgit. You can make money from the trading of the futures. You can actually lose a lot of money in the currency. Because gold normally is priced in US dollar. If you can't hedge the US dollar ringgit conversion, you are subjected to US dollar running, you know. I'll give you an example. When the ringgit to dollar is 3.5 to a dollar, okay? Then it rushed to 4.5 to a dollar. If you don't hedge that exposure, the ringgit exposure, you can make money in the futures trading. But when you convert back the ringgit to a US dollar, you actually lose a lot of money. Or when you put in, you convert, let's say, ask the market maker to convert 1,000 US dollar to our ringgit. So last time they get 3,005. But when they want to convert back, you already lose 30% because of from 3.5 hit to 4.5. When you convert back the ringgit to US dollar, you're actually getting less US dollar when you put in. I put 1,000, I get 3,005. But when I move back the other way, I need 4,005 to get 1,000 US dollar. You get what I mean? So that hinders the international market maker to help us to market make the FGLD. That's why Mr. Fong is very, very helpful. Ace is very helpful. They are helping us to market make the FGLD so that we can bring back the FGLD to Malaysia. Because they as a local entity can hedge US dollar. Foreign entity cannot hedge US dollar, ringgit US dollar, because they don't have underlying. Did I answer your questions? slowly, because we have to build the liquidity slowly. By the way, I just want to share with you. Palm oil, we started trading in 1980. Okay, it takes many, many years to reach 1,000 ADV, 1,000 lots a day. Now it's doing 50,000 lots a day. Sometimes can do 90,000 lots a day. But this takes times. We need to start somewhere. Okay, that's what we are trying to do. Agree, but you want to, but COMEX gold is very big. And you also have the US dollar exposure there. Nobody manage for you, you have to manage yourself. So if you trade COMEX gold, you are subjected to two types of risks: currency risk and the gold price risk. Okay, whereas in Malaysia, you are subjected to price risk. The gold price is priced in ringgit. Yes, that's something that we are trying to build. That's why we are exchange is coming out to get the retail to come in to start. If not, it will be another. We hope that gold will be something like the crude palm oil. Slowly, it will build up the liquidity. It will take time. Yes. Okay. I think Mr. Kim is coming up to share with you how the gold price, how they price the gold on FGLD. Because as an exchange, I can't talk about the price too much. Okay? I can talk to you about the contract, how to use it, and all the stuff. But the price, the exchange usually don't talk so much on the price, because we. Yes, it's only when it expires. Only when it expires. Yes, we use the price, LBMA price, only when it's expired. The daily price, we'll let it just go by itself. Yes, the settlement adjustment is not based on LBMA. It's more of a bid-ask settlement. The bid and the ask, it's not the LBMA price. There is a methodology that we use. The same methodology across, whether we use it for gold, whether we use it for palm oil, is the same methodology. So if the palm oil is accepted by international standard, the gold would be the same. So we won't manipulate. Exchange can't manipulate, number one. Yes. Yes. Yeah, because of the settlement methodology. Because FGLD is not liquid. As the two ladies pointed out, the FGLD is not liquid. The last time price may not be the final, the daily settlement price. I think it's not on our website, but it's shared with the broker. If you want, you can actually check with the broker. It's in their manual. Okay, it's not published to the world. Okay. It's not just the done bid ask. If it's just the done bid ask, then the next morning will be the same price. Yeah, there is a methodology that we use for illiquid contracts, because FGLD is an illiquid contract. So, any other question before I pass to Mr. David? Very, very minimal. One day is like 10 lots a day. It's like, that's why we are trying to build up the momentum. Market maker can't do it alone. They can't buy and sell themselves. They need people to come in to participate. That's why we are working together to try to build up the liquidity for the gold. Okay? If there's no more questions, or if you have any questions, I'll be here. You can always approach me later. Thank you for your time, and I hope I have shared some ideas with you through my presentation. I'll pass back to Mr. David. Thank you. Thanks a lot.
Let's give a round of applause to Andrew for making me in a tight situation. Yeah, I know a couple of questions are targeting to Philip. Before I start, it's best for me to address, especially on EFRP. The question just now on how fast is your conversion? Normally it's between 1 to 2 business days. If you're asking on the interest, let's have a cup of coffee. My answer to that. Regarding the cost of converting, basically just to understand the concept itself, EFRP is just a mechanism whereby it allows you, especially holding the futures position, to convert into a physical position. Okay, I know some of you will be thinking, hey, it's paper, what's the main difference compared to holding a gold saving book? There is a difference. Perhaps maybe later on during the break, you can ask further, what's the major difference between, especially in terms of prices, okay? The question on cost, again, I think nothing is free in this world, I think us as a Philip, we also need to survive as a broker. So there's definitely will be charges involved. But we tried our best to negotiate the price in a way that is whatever you get in the open market, or whether the competitors, like I believe Ace Capital has a lot of other competitors that's also providing gold. But we sort of like work closely with Ace Capital, hoping that they can give us a very good price for the customers that's trying to involve in the EFRP. So again, we'll do our best in terms to negotiate a cheaper cost. Okay. Now, I see a lot of questions on illiquidity. True enough, that's our role here today as a broker, trying to encourage you guys to jump on the bandwagon of FGLD. Because if you compare to other gold contracts around the world, first of all, FGLD is a currency, ringgit-denominated contract. You ignore your currency risk. You know how ringgit and US dollar can fluctuate so much. That's first thing. Second thing, the contract size is small enough. 700 ringgit to get an exposure of 17,000, which is technically 100 gram. Seems to be quite a good deal. Okay, I think this lady is asking whether the margin is usable to pay the full contract. Yes. Okay, but when you want to honor your EFRP, please make sure you pay the full amount. Philip is not going to top up on your behalf. No full amount, we cannot do. Okay, as simple as that. Okay, so I hope I can answer some of the basic questions on EFRP. I know it's going to get a bit complicated along the way. If any more questions, we can always address it on the later part. Okay, so yeah, before I start, any of you here hold physical gold? Don't put up your hands. Later you'll be targeted. Okay? Everyone is excited to know how. There's a lot of ways to really, whether you call it invest or trading gold. Okay? And what we are providing today is really to look into futures market as an alternative way for you to get access into the gold market. Okay? Especially with Bursa FGLD. So, before I start, my part is going to cover on outlook. Disclaimer again, today we have 2 outlook, but Mr. Kim is seriously a trader. No, he's definitely a technical guy. For me, I read news every day. My job is to read newspaper. So my views are pretty can say fundamental, but it's just a matter of opinions. Hopefully my opinion gels with Mr. Kim. If not, I think the best person you should follow is still Mr. Kim. Okay? Okay, let's get on with it. How many of you here thinks, let's talk on views. How many of you here thinks gold price is going to close lower this year? That means lower than last year in terms of price. Bearish, or rather bearish. Anyone? Only a few. How about bullish? Wow, exchange is very supportive. Very bullish. By the way, exchange cannot have a view. Personal, okay, personal view. Okay. So pretty much some of us are pretty not sure where the market is going to go. But generally, I can say it's been a pretty volatile market throughout the whole year. Okay. Now, just a standard disclaimer. Whatever I present here is based on my facts. Any trading call that you perceive or you hear, just take it as educational. Don't take it as a trading call and Monday you go and buy or sell. Just take it as an educational call, okay? And don't come back to Philip and say, hey, why do you do this? We are not liable. Okay, anything you can always ask Mr. Fong or Mr. Kim. I think they are in the best position to give an advice. Okay, so this is the agenda that I'm going to cover. The case for gold. Ultimately, if you ask us what's our house view on gold, is that we are still pretty bullish on the longer term. You see, nowadays you hear the things like Bitcoin. A lot of questions are being asked. Hey, will Bitcoin replace gold or not? To be frank, personal view, it's not. It's quite unlikely. let me just share with you, which history do you prefer? The gold history or Bitcoin? Just to let you know, Bitcoin just started 5 years ago. Okay? Of course, you missed the wave lah. Obviously, a lot of people say it can hit 10,000 or whichever, okay? That's just a matter of perception. But again, it's giving a bit of challenge to safe haven assets, especially gold. Okay? But if you ask me personally, which is investable assets, obviously I need to go to something that have a greater history. Gold history is crazy. It's many centuries back ago. So gold still has a relevance, especially in the financial market, as a safe haven. Okay. Now, just now I think Andrew shared quite a bit on the hedging part. I think it's very important, especially those who are holding physical gold. Okay, it's important to hedge, because you're holding a commodity. If you don't hedge, the price collapse, you're going to be in trouble. Okay, so futures provide you the ability to hedge, and I'll just share with you some examples how you can do it. Now, a lot of people have been talking, hey, is gold related to any other variable? Like the famous thing, hey, gold and Dow Jones, is it related? Okay, like brothers and sisters. Yes, it is, long time ago lah. Now it doesn't. Actually, it moves parallel. Okay, I'm just going to share with you some of the common relationship that gold has. Okay, then obviously I'll end it with a conclusion. Now, just to, again, pretty much fundamental analysis. If you're talking about technical, unfortunately, I will not cover in this session. So whatever I present here is basically on the things that we're looking at in terms of the gold fundamentals. Okay. Now this is a very interesting chart. This is to show you which country is accumulating a lot of gold. Unfortunately, Malaysia is not in. Don't be sad. Probably perhaps one day we'll be there. But just observe, the green one is India. That's why those at the front you can clearly see. Those at the back, I think, unfortunately, you can't. The green one is India. The purple one is Turkey. Russia is the blue. Want to take a guess? Which one is the red one? Which country? China. Okay. China is accumulating a lot of gold, and they are doing it from behind, which means they are not very transparent in a way that they don't tell everyone and shout, hey, I'm buying gold. They are doing it from behind. Okay. So this chart is telling us that China is indeed gearing up on their gold purchases, and it is massive. So right now, sitting on their, Central Bank, their reserve, PBOC. Okay. So right now, last time when you look at PBOC figures, how many of their reserve is in gold? It's minimal. It's only 0.0%. Right now, it's almost touching 2%. By the way, China numbers, you take it as it is, with a pinch of salt. Whatever they declare to you, you better just assume, okay? So they say, they claim their gold reserve is 2%. We believe China will continue to accumulate gold over the years. Because right now, you must understand, the RMB is in the SDR, the special drawing rights under IMF. So their currencies is in it, they will challenge the US dollar. And how to do it? They must make sure they have enough gold reserve to back it up. Okay? So this is an interesting picture. Now, how about this? Geopolitical tension this year is crazy, I can tell you. Okay, especially with US, both are also equally big size. Okay, US Donald Trump and North Korea. Okay, Mr. Kim. Okay, not the trader, sorry. Okay, now it's going to get a bit complicated. We have two equally big powerhouse. In fact, you know what North Korea did? They sent fireworks to US on their holiday. That's fantastic. Okay, and I believe this Kim Jong-un is seriously going to be giving a lot of pressure, not only to US but around the world. Just look at this. These are three different administrations, starting from the founder Kim Il-sung, which is the grandfather of our current North Korea president, Kim Jong-il and Kim Jong-un. Look at how many missile testing they have done. So Kim Jong-un is seriously pushing up the ball. Okay, and we reckon that this will continue until they reach their objective, which is to make US fall. Okay, I don't know why they hate US so much. Everything they do is to target US, the Western economy. So with this kind of volatility and this kind of geopolitical tension that we're seeing in the market, gold will definitely be in favor sooner or later. Okay, and if this escalates, if this guy cannot be controlled, if the Mr. Fat Boy cannot be controlled, I think we're going to have an issue. Okay. Now you just look at how the development of their missile project is fantastic. I'm really amazed how they do it. I'm not sure whether they got a spy somewhere or whichever, but over the years they've been developing missile capability that able to reach US, and that is very dangerous. Okay, that's why now Donald Trump is saying, hey, let's put something in South Korea to protect. Let's put something in Japan to protect. but that's not going to solve the real issue. North Korea still continue to propagate and continue to expand their missile program, okay, until they reach their objective. You see now the capability is able to reach even to Canada shores. Look how massive they have advanced in terms of their missile technology. Okay, so this is something that markets should be fearful. If you are not fearful, I don't know what to say. Okay, whether this could trigger further escalation on geopolitical tension, it could be. Okay, that's why now we are talking about China, Russia, US. They are doing something, hoping to tame this North Korea. But I think that will not result in anything. Okay, so based on all this scenario that I'm trying to picture, the North Korea and US tension, the only country that is in the middle, you want to guess who? China. Okay, and China from behind is buying a lot of gold, just to let you know. Okay. Now, the bullish case for gold is, first thing, we are definitely looking at geopolitical tension as a trigger. Second thing is, by the way, these dates are not simply put up for show. Okay, it's also not my birthday. I don't have so many birthdays. These are all the days that is auspicious to buy gold. In which custom? Want to take a guess? Mr. Sri, you want to take a guess? Indian. Okay, which is the biggest jewelry buyer in the world? I think this one I must pass to Mr. Fong. Which is the biggest country that buys a lot of jewelry? Take a guess. India. Yeah, India. Okay, you'll be fascinated that they have a calendar to buy gold. On this particular day, okay, is the best time based on the Indian tradition to buy gold. Okay, in India. That's why you look at the jewelry demand, it spikes at certain months because of these festivals. Okay, so overall, India is always a big market. I just don't understand, They don't care about money. Now it's even worse because of the remonetary of the rupee. They don't care about the rupee. Whenever they got extra money, they go to a jewelry shop and they buy gold. Okay, just like how Andrew showed the picture before. You have people lining up, queuing up to buy. I think that brand was Leaning, if I'm not mistaken. But in India, people are queuing up to buy gold. But do you notice that Southeast Asia is also coming along quite well, especially in Thailand? Okay, Thailand is also gearing up their purchase on gold. I don't know why. Okay, maybe they just don't have the confidence in the currency. But clearly, India is always a big market, and it will continue to grow, especially for their gold jewelry demand. Okay. Now, this is another interesting thing. Who is the biggest gold holder in the world? Central banks. Central banks. Not China. China is accumulating now. But which country has the biggest gold reserve? US. At where? Fort Knox. Do you believe? There's a lot of conspiracy anyway, so we just leave that aside. Assume it is. US is still the biggest holder of gold in terms of their reserve. Okay, but recently they are continuing to export their gold. Okay, actually technically they are selling their gold. Why? Who is the one that's buying? China. Okay, in fact, if you just look at year on year, 2017 this year is the highest gold purchase from China, especially from US gold. They will buy a couple of golds from other countries like France or Italy, but mainly also from US. Okay, US is one of the biggest nations that got a lot of debt, beside Malaysia. Okay, so it's clearly that they are trying to liquidate some of their gold to cash out. Okay, but the one that we should be concerned is China, because China has been buying a lot. Okay, now you can clearly see here. The thing is that they always put Hong Kong and China. The caveat, yes. Yep. 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 Correct. Technically, when you look at the official numbers from World Gold Council, especially for US, they say they claim they got 8,000 over tons. That includes gold from other countries. So technically, US don't own any, but because they give the credibility to US, they let US keep their gold, especially for European countries. That's correct. Yep. Yep. Correct. That's why it caused confidence crisis. And that's where people say, hey, is this really US got the gold, or they siphon the gold out? But that again to me is a bit of conspiracy. But true enough, certain gold reserve in US belongs to other country. And certain other countries, they park their gold with US in exchange for liquidity, US dollars. Okay? So yeah, to that, yes, it is true. Okay? But just going back to the picture that I'm trying to paint, I think certain countries are positioning their gold reserve, especially China. They use Hong Kong as a front because, they don't want to display that way, China is buying from behind. So they use Hong Kong as a front to get in the gold. Okay, but this is based on 2017 numbers, just only 2 months. Look at how many tons they've been buying from the open market. Okay, and these golds are mainly coming from US. Okay. Now, this now Andrew mentioned, the way FGLD is settled is London, LBMA. But do you know that Shanghai also has gold fixing market? Whether you overtake London, that is a different story. Okay, but what it tells you is that China is opening up their gold market and is creating a market over there because the inflow is huge. Okay, outflow minimal, but there's still a bit of outflow. But they're trying to build a market over there. So sooner or later, if you're a gold trader, I don't know. Now you're looking at London to quote you a price. Maybe sooner or later you have to go to Shanghai and ask those guys to quote you a price because they are big. Okay, so these are a couple of developments that we need to watch out. Okay. Now this is an interesting chart. It makes me very bullish for gold in the long term. Okay, this one a gentleman was telling me, hey, I look at the report. Gold, if you go back to the gold dollarization economy, whereby you go back to the gold standard, gold price should be around 10,000 US dollars. Okay, that if we go back to the gold system, which I think is unlikely. Right now, you're all riding on US dollars. Every commodity you name outside is in US dollars, except Bursa FGLD is in ringgit. Okay, most commodity or every single transaction, financial transaction, even Bitcoin is in US dollars. So US dollars hold the dominant power in the financial market. If it were to go back to gold, it means US dollar is no longer in favor. Okay. Now I just want to show you this because the yellow one is actually the gold reserve for US, and the black line is actually the US money printing or QE. The money printing in US is crazy. Okay, it has been doing it for so many years. And if you just look at the gap, what this tells you is that they print so much money that they no longer can be backed by gold. If they were to go back to the old tradition, gold should really climb as much as possible. Okay, so right now the whole market, rather the whole financial system is flush with the US liquidity that they are pumping into the system. Now, this will change very soon. If you look at the gold and silver market recently, in the past 2 days, what do you see? You see prices retrace, right? Especially silver. Okay. I also had quite a good case for silver, which later part I will share. But what this tells you is that we are going into a cycle of higher interest rates. When you have higher interest rates, what happened to your US dollar? Decrease or increase? Increase. When your US dollar increase, what happened to your gold? It will decrease. This is based on common relationship, but this is what market is reacting to. Give it another 2 or 3 more months, everybody is expecting the US to increase their interest rates, and therefore it will make US dollar stronger. And when US dollar stronger, your gold will be in question. So if you look at short-term wise, I think gold has still a bit of further downside to go. Okay, before I think medium to long term is still quite bullish. Okay. Now this is a daily change in Fed Fund futures and precious metal. You see how they are correlated negatively. So when you increase your interest rates, Federal Reserve interest rates, okay, usually gold will move negatively, inverse. So gold price will come down. So watch out on next couple of FOMC meeting, whether will they announce the increase in interest rates, which likelihood is high now, okay? Now, this is another case to be bullish for gold in the mid to longer term. Reason being is because right now, if you talk about real interest rates, real interest rate here take into account into inflation. So what it means that your actual interest rates, whatever your bank quote you, minus your inflation level is negative. That means your inflation is catching up. Okay? A lot of countries is actually cutting down their interest rates. Why? Any reason? Okay. If you just look at it, a lot of people telling me, hey, our economy is improving. Like you look at some of the reports you read from World Bank or IMF, they keep telling, hey, world economy is going to grow. is it really growing? I think that's questionable, okay? Actually, a lot of other economies are slowing down, and they need to cut interest rates to push their economy. So the only problem is that they keep cutting interest rates, their real interest rate becomes negative. When it becomes negative, it's actually a strong case of a gold. Unfortunately, I don't have the graph to show you the real negative real interest rates with gold price. When you have a negative real interest rates, your gold price will be supported, okay? So you just look at interest rate, besides US, everyone is cutting, okay? Malaysia, not the time yet lah. In fact, everybody is looking to increase. But majority of other countries is actually cutting down their interest rates, okay? Now, yep. 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 See, gold is a funny animal. You look at a lot of, later I'll show you the relationships. You look at other common relationships that they used to have, the gold against US dollar, gold against interest rate. Some of the relationships that they used to display no longer work in favor. For example, gold and Dow Jones. Dow Jones is all-time high. Why gold is not all-time low? Okay, in fact, if you look at it, okay, VIX is all-time low, but your gold is not all-time low. Okay, it climbed from 1,000 US dollar to 1,002, and it holds there. Okay, gold is looking for, when people are uncertain, especially traders or fund managers, you are uncertain. Where do you rush to? You can rush to currencies like yen, you can rush to US government bonds, or another assets that look at precious metal. So I would say we can't just relate in such a way that, hey, gold and interest rates, this is a relationship. Okay, but there's a lot of other factors that can also influence gold. Which factor is a stronger factor? That is the question. Okay, hopefully I'm able to assess which is a stronger factor. Okay, now coming back to here, the gold-silver ratio. I know a lot of people will say, hey, what's our view in silver? I would say both precious metal will benefit, but which will benefit more? Personal view is actually silver. Why? Just look at the ratio. Okay, this black line is actually the gold-silver ratio. Right now it's doing about 74. The highest in history, we hit 90. And every time when you hit the highest ratio, the gold and silver ratio, what happens to your gold price? Your gold price will come down. Your gold price will go up, but your silver will move faster. Okay? So if you look at in terms of volatility in the market, when this ratio is high, that means silver is way undervalued compared to gold. Okay? So whenever there is sentiment are coming back into the precious metal market, silver is something that you can look at as well. Okay? Because eventually silver will try to catch up with gold to bring down that ratio. Okay? So right now the ratio is quite high. In fact, I think yesterday it jumped because silver, I think, went down further than gold. Okay? I think those who are trading the silver market, you notice there is a bit of flash crash yesterday morning. Okay, went down to almost $15, then went back up to $15.40. Okay, so this, if you just look at the gold and silver ratio, looks like silver has a bit more room of upside compared to gold. Okay, now this is the common relationship, gold and crude oil. Okay, the thing is sometimes they always say, commodity moves in parallel. One move, every commodities will move. Okay, so in technically speaking, they're trying to look at, because everything is denominated in US dollars. So they're trying to say that whenever crude oil goes up, gold will go up. Just look at this chart. Do you think that it moves positively? Okay. At most times, it moves positively. But recent times, it's moved a bit inverse. Means one goes up, the other comes down. Okay. So a lot of common relationship that we base on crude oil and gold that we used to rely on may no longer be relevant in today's market. Okay, each of them will work on its own fundamental. Okay, now just to show you another one, gold and Dow Jones. This is another crazy idea. Okay, they used to say that whenever Dow Jones goes up, okay, gold will come down. Now Dow Jones is almost reaching all-time high. In fact, it's all-time high. Okay, but your gold is not at all-time low. Okay, and in fact, there's certain period of time where Dow Jones goes up, your gold goes up as well. Okay, so that relationship, and what I'm trying to say is, this relationship may no longer hold, especially in this current market. Okay, so you have to be careful. If you are relying on such a relationship to trade, I think you will get, to a certain extent, a bit of volatility, a bit of shock. Okay. Now, just to share with you, when I look at commodities, I like to look at seasonality. When I mean seasonality here is which are the strong months to buy gold and which are the strong months to short gold. Okay, you can clearly see based on here we're divided into January to December. Which particular months, or region or months is weak for gold? Beginning of the year or end of the year? Weak, not strong, Okay, don't ask me why, but this is the pattern that they display. Usually, gold prices at the end of the year is usually weaker compared to the beginning of the year. Okay, I'm not sharing you a strategy, but what I'm trying to say is based on this kind of pattern, you're able to gauge where gold price is going to go at the end of the year. Okay, so beginning of the year is usually the strong period for gold, and therefore usually people have a tendency to long, and at the end of the year usually they have a tendency to short. Okay. Now coming back to futures contract. So like I mentioned just now, earlier part of my presentation, there's a lot of ways for you to get into the gold market. Common convention, get a gold saving book from a local bank, or perhaps go to a jewelry shop and get a physical gold. Okay. Now, technically, we are providing you another avenue to look into the futures market and convert it into physical at your liking. Okay. Now, futures market is actually very handy, especially for hedging. Okay. Like I mentioned, for those who are holding physical gold, okay, I think futures market is a good way for you to hedge your price risk. How to do it? Now, I'm just going to share with you. Okay, 100 gram is manageable, right? Or you guys want 1 kg? My example is 100 gram based on the one lot contract on FGLD. Okay, the current price, I think Mr. Fong and Mr. Kim can advise better. This is just an example for illustration purpose. So if you go to the physical market, and whether you call Philip or you call Ace and quote me a price in the physical market for 1 gram, how much will it cost? Assuming it's 148, it costs you 17,800. Okay, and you think you'll go up in the long term. So the next day, trust me, gold market, or sometimes whether market doesn't work, most of the time not in your favor. Okay, so it's always a way to, we must always understand how to manage the risk. Okay, like what Andrew mentioned, if the risk not worth taking, don't do it. Okay, so if the next day the gold price start falling, and you think you'll fall further in the short term, what will you do? Okay, you can literally go to Bursa Malaysia, FGLD contract, 100 gram. You can technically one contract fits your size, so just short 1 lot of Bursa Malaysia FGLD contract. Okay. Now, and let's say it went down. Okay, these are actual scenarios. You bought 100 gram gold bar at 178, and you think the prices will fall to 168. How much will you lose in the physical market? Come on, man. Help me. I know it's early in the morning. It's cold. Okay. 178 is per gram. And if you bought at 178, the price fall to 168, you lose 10 ringgit per gram. And one contract is 100 gram, so you lose 1,000 ringgit on the physical market. Okay. This excludes GST and commission. Okay. So like the gentleman, I'm trying to manage the cost for you. Okay. So what you should do? In this kind of scenario, normally to protect your price risk, you will go to the futures market and you do the opposite, which is to short a 1 lot futures contract, taking in mind that the physical market you are paying 17,000, in this case 17,800. In futures market, you're not paying 17,800. You're only paying how much? 700. You look at the amount of leverage you have. It's between 5 to 7% of your full contract value. Or rather, they say leverage. Okay? So it is, first of all, it's easy to manage 1 lot only. Okay? And the margin for the 1 lot, 700 ringgit, is manageable. Okay? Now, that was a case of a downside scenario. So what, in a downside scenario, very simple. In physical market, you're losing 1,000. But in futures market, you short at 178 and you buy back at 168, how much you make? 1,000. So that money that you lost in the physical market will be covered by futures market. Like I say, excluding GST and commission. Okay, that aside, but that's what you call a perfect hedge. so you don't have to suffer any downside risk. Your gold is locked at a certain price. Okay. Now, if it's an upside scenario, very simple. The purpose of hedging is not for you to make money. Take note. Okay. You want to make money, you go and speculate. Take one single-sided decision. But if you are talking about hedging, you must be prepared to suffer losses in the futures market in case the market is in your favor. So for example, in this case, you bought at 178 physical price, and the physical price went up to 188. How much you make in the physical market? 10 ringgit per gram. Okay. If you talk about 100 gram, it's 1,000 ringgit you make. Okay. In futures market, it's opposite. Because you shorted at 178, the market went against you, you lost 1,000 ringgit. So technically, your net balance, excluding your GST and other costs, it should be 0. Okay. So that is how hedging works. Okay. Obviously, when you have a bigger lot size, for example, you're holding 1 kg or 10 kg, you manage your lot size accordingly. Technically speaking, one contract is 100 gram. So 1 kg, you just need to do a 10 lots on the futures market, which is only cost you 7,000 margin. Because the physical market is always 100,000, and that's quite a lot. Okay, so futures allows you an opportunity for you to hedge at a very manageable price. Okay, so far, get it, the concept? Okay. So coming back, hedging is only with one purpose, is for you to hedge your position, not for you to gain anything. And if you really want to gain anything, it's purely through the way of speculating. Guess where's the market direction is going to go, whether it's through a fundamental analysis or whether through a technical analysis. Okay, so if you are holding a physical goal, be it whichever way or channels that you're going to go, why not you hedge it through a futures contract? And it's manageable because the margin for one contract is quite okay. Okay, if you look at other contracts that is available on other markets, those margin is not cheap, and you are exposed to US dollar risk. Okay. So these are a couple of things that I think is beneficial. If you are really looking into a growing opportunity into a gold market, these are the things that you should consider. Okay. Now I think Busa allowed me to do 5 to 10 minutes on marketing. I know you have done a good job to market for us as well. We thank Busa for that. Just doing my part. Now, why choose us? Like I mentioned, I think you are trying to work closely with ACE, also the market maker for FGLD, okay, ready to provide you a channel for if you are going to the futures market via Busa, try to take the EFRP position, okay. We are trying to work closely with ACE to fulfill that portion, okay. I know there's a lot of questions on how it's going to work and all this, but we can clarify it along the way, okay. Now, other than that, we are just futures broker, local futures broker, doing local products. Mainly focusing on FGLD, FKLI, and now on FCPO. Okay, I think our dealing desk is 24 hours. Marketing desk is not 24 hours, mind you. So don't call us after 6. You can call the dealing line. Okay. I think we always believe in education. Philip Futures, we know there's so many other brokers in town. The way we differentiate ourselves is through education. In fact, next week we also have another session, but it's not on gold. It's on technical analysis at Bursa Malaysia. If you are keen, I think all of you have a feedback form, right? Just indicate that you are keen to participate, we'll just register you in. Okay, it's a whole day event, Bursa Malaysia, starting at 9. Okay, so education is one of the key things that we provide to our traders, also to prospects. Now these are the things that we provide besides education, also platform for you to execute orders. We are now both on desktop and mobile. By the way, we don't charge anything on the platform fees. Account opening is free. If you are keen, please look for my colleague, they are located outside at the registration area. If you are keen to open an account with us, do it. I think obviously, there's all other things that you can do with a futures contract. Okay. On top of that, we also like to mention that we also have options market for you to consider. How many of you here trade options, by the way? Wow, it makes my job even harder. Okay, I thought futures market is probably at least 50% will be in futures market. So options market, I'm hoping for 20%, but I only have one hand out of 80 people here. So it's going to be a long journey lah. Warrants? Oh, Busa is asking. I'm asking on behalf of Busa by the way. How many of you here trade call warrants? Huh. also a handful. So, Busa, I think you know what you need to do, right? Don't worry, Philip Futures will always be your supporting partner. Okay. Lastly, I think if you need more questions, especially you need the slides, we can always give it to you. But just to end it as a final conclusion, our view for gold on the longer term, we are quite bullish. Mid-term, not really mid-term, but the short-term wise, I'm talking about 3 to 5 months, we are in fact quite bearish because of the interest rate cycle that Fed is going. But on the other hand, on the other side of the story, you got geopolitical tension that is happening. You know, this cyber attack is also getting quite crazy nowadays. Okay, I'm not sure how Bitcoin is safe from that lah. Okay, but trust me, whenever we have this kind of tension around the world, regardless in any form, one will look into the pressure. One will look into gold as a safe haven, and I think it's a good opportunity. If you're going for a medium to longer term, you can start looking at gold prices for now. Okay. Before I pass it to Kim, in fact, I think we'll take a 15 minutes break. But before that, any questions from the audience? So it's either, yeah. Wow, that is a very sensitive question. Thank you for the question. I think we can address it on a separate occasion. Okay. Anything else besides cost? Subject matter. Nothing sensitive. Don't be too particularly sensitive also lah. Okay. Yeah. Interest rate cycle will end. Wow. Oh, that's a very tough question. Now, what our market is foreseeing is we are expecting when the interest rate cycle will rise. Now they are also they are having talks to reverse the QE. That means mopping up the liquidity. That is a big issue. You know, once you mop up liquidity, you know our market is so flush with US dollars. Everything is inflated. You look at Dow Jones, it's inflated. You know, if you are a value investor, your PE, 21 times is highest in history. Do you want to go in? I don't know. Okay. So once you reverse that QE, you absorb back the liquidity that you pump into the system. I think everything will be in jingles. Okay. The market is expecting the interest rate cycle to start very soon, uprise. When it will end, we won't know. But I can tell you, they have a lot of liquidity outside. They have to mop it up sooner or later. Okay, to me that is a very tough question to answer. Okay, but from what we assess and gauge, from 2017 second half, at least to 2019, early 2019, the interest rate cycle for US is going to go up. It's not going to stay stagnant, or it's not going to come down, because all the data is pointing very positive picture for US. And it will only continue to go better. Okay? If you believe in the data, lah, disclaimer, okay? But US, I think, should be okay. Lah. Okay, any other questions besides that? So either you are convinced or confused. I hope you are convinced. Okay, if you are convinced, no, we can always register an account. Okay, any other questions? If not, we're going to take a 15 minutes toilet break. Just be back to the room at 11:15 because the next speaker is, I'm looking at him, he's very anxious, very nervous to present his strategy already. So yeah, please come back to the room at punctual for the next 15 minutes. Okay, thank you. Okay, is everyone back? Where's the next speaker, by the way? Oh, there you are. Okay, I think next speaker, Andrew mentioned, Ace Capital is our market maker for FGLD. Mr. Fong is there. Any question, you can always ask Mr. Fong also. Not necessarily you need to ask Philip. Then clearly someone, you see people quoting prices, right, on FGLD platform. Illiquidity, that one a separate issue, but at least someone is active enough to quote you prices. And you want to hear from someone who's quoting you prices, right? So let's have Mr. Kim, who is the chief trader for Ace Capital, to come out and present his presentation. Let's give a round of applause.
Hi, thanks David for the introductions. A very good day to all of you, and I hope you're all doing fine and feel refreshed from the tea break just now. Oh, okay. Yeah, just a short introduction about myself. My name is Kim Fong, and they usually call me Kim. Okay, I have about 7 years in bullion trading, which I first started in Dubai as a precious metal and forex dealer. And now I came back to Malaysia and work with Ace Capital. Just give me a moment. Okay, just look at the overview, what I'll be actually touching on today. Just a quick one. A short introductions to my company, Ace Capital, and then a disclaimer notice. And then we have a gold chart, a general overview. And then, of course, into the topics of Gold Outlook 2017. It will be divided into two parts, more onto the historical factors and prevailing factors of 2017. And of course, we have trading strategy, will be the technical analysis, and psychological, more to common sense. As for the technical analysis, all right, I'll touch on the fundamental and basic surface on it. I will not actually go in depth, just to make it more easy to understand. Okay. All right, Ace Capital actually established in the year of 2009. It's actually physical gold trading, used gold, and also new gold. We buy and sell. Okay. And we actually major in one of the industry is, just one moment, jewelry shops, pawn shop, and gold factories. And one of the most important is we are the current maker for Bursa FGLD. From here, right, I will actually try to strive for improvement and to ensure the market is liquidable. All right, this is the photo of the gold that we have been dealing in our company. It's nice, right? Yellow metals. Okay, I'm sure I'm not as good as Mr. David giving good presentation, but I try my very best, all right? Okay, next we have a disclaimer. Same as Mr. David's, it's only for educational and knowledge sharing purposes. Definitely not like trying to solicit you all to actually trade future goals. Okay, disclaimer for this. All right, let's start with the gold chart of 2017. First of all, as you can see that, sorry, I used this mark. First of all, you can see that this is purely on the January gold price till end of June. So you can see that the gold price in January 2017 actually was quite low, and also actually opportunity stage to actually to buy, and it actually peaked to the highest of 1,295 around that area. Okay, did you all know, see anything from this chart, some hints from this chart? Actually, it's more towards here. This chart actually is providing a very strong resistance hint. It cannot break 1,000 above 1,000 USD. So actually, this actually created opportunity to some of the speculators to actually sell at this level, and then they put a stop loss at 1,300. This is just a general view for the gold chart of 2017, and I also have a gold chart for the past 20 years. So I'll give you a broader view about how's the gold been moving in the past 20 years. Let's start with the earlier of the year of 1996 to around 2001. The gold actually quite stagnant during that stage. Only when it started to move up in the year of 2002. But before that, just let me do a quick explanation that there was a crash in 2000, a dot-com crash. And then after that, we have this 2007, we have this subprime mortgage crash. And then in 2008, we have this banking sector crash in US. And as a result, the gold price actually surged all the way up to 1,920. That was almost the peak for this. And what was the main reason for such a spike to the highest? Not just because of the crash itself, but because of the introductions from the Federal Reserve. They introduced this quantitative easing 1, 2, 3 in between 2010 to 2013. And also the Federal Reserve actually, they reduced the interest rate from about 4% to around 0% to around 0.25%. This was one of the reasons the gold actually moved up to the highest. One thing to actually take note that during 2013, right, there was a big correction in gold price, which actually fall from 1,700 plus to around 1,180. This is caused by the correction due to the improvement in this so-called US economy. When I say US economy, why? Okay, you see, the Federal Reserve, they pump in a lot of money into this US economy in order to spur the, how to say, the development of the company to continue to invest. And actually, the data show that there was there was this improvement in data, for example, like employment. Employment actually increased, and also all the factors into considerations. But one thing to actually let you all know that in the year of 2015, there was this started beginning the raise of interest rates. As a result, the gold price dipped to around 1,045. That was the lowest during that time. And then it actually rebounded. Okay, this is just a general broader view of the gold chart for the past 20 years. Okay, let me move on to the next one, will be the historical factors. This is more onto the gold outlooks of 2017. The first will be the historical factors, is the elections, but definitely not the US election. It's the, just one minute, it's the Europe elections. So what does it have to do with the gold? What kind of implication and factors? Actually, what we can say is more about the investor, about the fear and uncertainty, because some of the opposition party from certain of the European countries, such as Netherlands, Germany and France, they were all having elections, okay? Some of the Euro-skeptical party actually have a different government policy which might affect the Europe as a whole. Let me give you an example for that. French elections. One of the lady called Marine Le Pen actually is a right-wing politician. She actually pledged to have a Frexit vote, which means to actually exit from France. This is actually quite serious. To some of the investors, this could destroy the Europe. But unfortunately, she didn't win, so everything actually calmed down. But during that time, this ongoing election actually had boosted the gold, the demand for gold, in order to hedge against uncertainty in case if the euro crash, because if really there was a Frexit, some other country might follow on. For example, Greece might follow the path of this Frexit as well. So this is one of the factors to consider. Okay, let's move on to the next one. It's the US political situation. Actually, it's a bit funny. I would say it's more related to Trump's political situation. First, we have this Donald Trump National Security Advisor, Michael Flynn, resigned from his role over the issue with Russia because suspected of this conspiracy theory. What he actually did was contact with these Russian hackers in order to get the email contents of Hillary Clinton, and also spreading fake news regarding about this Hillary Clinton is a child trafficker. Something like dirty politics. Okay. All right, next, we have this FBI Director, James Comey, actually confirming that there was investigations into this Russia interference into this US election in 2016. Other than that, they also suspected that there was a link between Donald Trump campaign with this Moscow. Actually, this has actually given a perception to the investor about the reliability and credibility of the US government for this Trump, during this Trump campaign. And one of the most serious one would be next one, this one, firing of FBI Director James Comey. I'm not sure if you all still actually remember in the year of 1972 to 1974, there was an ex-president, US ex-president by the name of Richard Nixon. Okay, almost same situation. Okay, first it's about the Watergate scandal, something like related to this Russia scandal, Michael Flynn. Second is this ex-president Richard Nixon actually was impeached because of trying to keep hold of the tape, the evidence. Okay, and also related, almost near to this same similarity of issue. And finally, he actually fired one of the judge during that time, leads to impeachment, which means he actually have to leave the office. But before he leave the office, of course, he resigned. So this is, the investor actually worried this case actually would relate, which means Donald Trump would be impeached because of obstruction of justice. This actually gives the investor perception the US economy might not be doing well because it's everything related to US economy. when you relate to US economy, it's related to gold, as mentioned by Mr. David. Gold is dollar denominated. So that's the reason why it affects the gold movement, one of the historical factors for this 2017. And one more would be the repealing of Obamacare. It's just a health care. I mean, it's passed through the Congress, but what does it have to do with gold as well? The reason was actually also to the investor as well. They think that Obamacare could not actually repel. How about others, infrastructure spending from Donald Trump policy, tax reform? All those might have doubt to the investor that it cannot pass through the Congress. So eventually, it's all about the whole economics for the US. Okay, this is one of the factors. And during that time, this actually boosted the gold, actually given some like safe haven, because some of the investors, they worry about the future of the US economy, whether there will possible another crash or not based on this. Okay, next will be on the geopolitical tension, as already mentioned by Mr. David just now. It's all about the North Korea. But in the earliest of the months, there was also this missile strike to this Syria. Receive a condemnations from Russia actually, and also one of the U.S. Political person went to Russia, received a hostile receptions. So actually, this created a tense and also opportunity for some of the speculator to actually go long. They actually buy gold during this time because of so-called buy the rumors and sell the fact, or buy the tensions and sell the calm. So this is some of the issue that related to these geopolitical tensions. Okay, I don't have to keep mentioning on the North Korea again. They've been continue to test their missile program and to something like to try to provoke the US. So they actually provided a boost during that time. So this is for the history, geopolitical tensions. Okay, next we have US economics. For the part one would be about the interest rate rise. Okay, just now I showed you all the chart for the 2017, right? As you can see, there was actually a dip in March. The price actually came down in March. So the reason was because of there was an increase of 0.25% rate hike. But the funny thing is, the price actually dipped not because of after the announcements, it was before the announcements, because of the fear, because of the this big institution trying to speculate a possible rate hike. Actually, it created some selling pressures. That's why the gold actually dipped in the mid-March. Okay, one of the factors to consider. Okay, and then we have U.S. economic part two, will be towards Trump. I'm not sure if you remember during April, actually, Donald Trump actually tweeted this about USD is too strong and actually hurt export. As a result of this, right, the gold price actually shot up about $20. And also the next day, the USD actually came down. Actually, I also benefited for this because I was actually having some position. I really need to actually sell at high, but because of this news, I was watching at night. Actually, it jumped, so I managed to sell at high. So I want to say thanks for these tweets. But as you can see, such a tweet has such a big implication, you see, to the movement of gold. So everything is related to US dollar. You see, because of US dollar is dollar denominated, so when it becomes cheaper for other currency to buy, so it becomes opportunity to buy for others foreigners actually. All right, US dollar is getting too strong and prefer low interest rate from the Donald Trump. Okay, as for the part three will be the hike in June. Okay, this time the gold actually didn't actually move up. Okay, I'm sorry, I should explain to you before on the part two. On the part one before. Sorry. The interesting things about this interest rate hike was, after the announcement of this 0.25 interest rate, somehow the gold rebounded. The rebounded is because actually a lot of investors actually they think that it's just only less than 1%. It's only a quarter point hike. So they actually don't feel the pinch. They say it's bearable area. So they actually continue to buy the gold. And also with some other factors such as I mentioned, geopolitical tensions, US political situations, it actually rebounded and actually spiked to around 1,295, as I show you in the chart just now. Okay, we're back to economic part 3. Okay, after the rate hike for this June, right, the price actually didn't rebounded. In fact, it actually started to come down because the investors said they feel the pinch. They started to still feel the pinch already because the interest rate is like within 1% to 1.25 right now. So that's the reason the gold price came down. And not just that, but after the election from this Europe side, everything has already cooled off. And also the Syria issue, the war, everything also has been cooled off. That's why the price also has been started to actually go down. And as of yesterday closing price, it was around $1,213. So you can imagine the people actually been start selling. Okay, let me move on to the next will be the economics projection, but this is on the prevailing factors. So what we will need to look into, would be the hawkish tonality from the Federal Reserve, FOMC. They actually suggest of continuing a gradual rate hike, which means they're possible to have one more rate hike in September. Okay, so I'm going to show you the upcoming meetings for the FOMC. Actually, yearly they have 8 meetings, but now they're remaining 4 only. So you can actually take down of this date, possible wait for any news or announcement or any possible rate hike. I heard that there could be also another rate hike in December as well. So it could be 1 plus 1 rather than just 1 itself. So this is one of the factors to look into with the outcome of the gold outlook later on. Okay, what we have next, global economics projections. Okay, as for this, I looked back at the news a few days ago. I saw this one. The government of England actually suggested that they should raise interest rates if the business grows. And then Mark Carney, actually is the governor of England. Actually, he said that removal of monetary stimulus is likely to become necessary. Other than just UK itself, and then we also have European Central Bank, head of this Mario Draghi, also signal possible to trim back its stimulus. Actually, all this showing a hint of possible future rate hike. So you see, it's like almost in sync with US started to go for interest rate hike. So for this coming 6 months, I would say the gold will probably in a bearish sentiments. Okay, this is very important. Again, as mentioned by Mr. David just now, India is actually top 2 consumer of gold. Okay, and they actually have introduced or implemented this GST on this 1st of July 2017, removing the 1.2 value-added tax and 1% excise duty. And gold will become more expensive for them to spend more money because of the GST. So I actually prepared a chart for you, but let me actually explain this part, pre-stock into the inventory. Because of the announcement that there will be a GST introductions in India, 3% in July, so some of the gold jewelers, vendors, they actually have, what they do is they actually buy a lot of gold. They imported a lot of gold in May and June in order to pre-stock the inventories because they know that July there will be introduction of this GST. So they call the window pre-GST gold. So which after the implementation, they save the cost from the GST. So you can imagine they pre-stock the inventories. It takes probably some time for them to clear off the inventories as well. And also if the gold become more expensive in India because of this GST, you can assume that this coming 6 months, the demand might be not that strong as usual. Okay, I prepare you a chart comparing between the before the GST and after the GST. It's actually in rupees. So we take the example of 100 grams in 995 in rupees. Let's say we get this figure. Let's say this is before GST, this is after GST, okay? Okay, in India, you have to pay custom duty 10%. This is compulsory. And then plus the 3% GST. It's actually quite expensive, isn't it? But you see the demand is still continuous to flow in. I heard from one of the articles, they said that India actually import about 600 tons of gold yearly. Okay, back to the comparison. After with the, okay, we go for the without the GST first. You can see that the price of gold in rupees, and then with 10% of this custom duty, and then we add up, we get this, and then 1% excise duty, and then plus the value-added tax. Finally, okay, there's no GST, right? So we skip this, and then we get this amount. But with the introduction of GST, okay, we have this, but we don't have this excise duty and value-added tax. Straight away, we plus a 3% tax, and then we get this. You can see quite marginally higher. But in India, right, they have this called making charges. Those are just gold itself. There's making charges, which means you have to make into jewelry types, necklace types, and earring types. Those are so-called making charges. It's actually 12% of the gold. Okay, so you add up, you get this one, but you don't have to pay GST for that. But for these making charges, right, with this introduction for this particular section making charges, you have to pay 18% of this GST on top of that. So actually you add up all together, you end up, for a normal consumer, you end up, you have to pay extra of this amount. If you add up together, you can see the comparison. But I just want to make one amendment. Few days ago, I just found out that they changed the percentage of tax for GST from 18% to 5% for these making charges. So I'm sorry, I didn't get the most updated chart because they only have this one. So you should reduce some of the figures probably to around 2,000. But still, you will still see that the price of the gold get higher after this implementation of GST. So overall, I would say the demand for gold will be less within this coming 6 months. And next one we have to look into will be the so-called USD index. It's like, okay, it's just one moment. Okay, it's like comparing the movement of USD index against the gold. So USD index is a measure of the value of the United States dollar to a basket of foreign currency, mostly related to the trading partner such as euro, okay, sterling pounds, and then we have Japanese yen, and then we have Swedish krona, Swiss franc. Okay. One of the surprise things for gold is that they always have an inverse relationship. So usually if the USD got strengthened, right, the gold will tend to fall and vice versa, as been explained by Mr. David as well just now. So I show you a chart. It's obviously, right, actually there's an inverse relationship. You can see this orange color. Whenever you move up, the USD is actually on the downside. Whenever the USD actually up, the USD index as a whole, the gold actually tend to fall. So actually this giving some proof that there's an inverse relationship to a certain ratio. If you say 50-50, I won't say 50-50. I would say maybe 60-40 inverse relationship. Yep. I'm not sure if you still remember for the gold chart 20 years that I showed you all just now. There was a big correction in 2013, right? The gold was at around 1,100 plus, actually dropped to 1,180. Okay, you see the year of 2013. I mentioned that the US economy actually recovered, right, due to the quantitative easing and also 0% interest rate in order to help the economy. Now you can see that the USD actually strengthened. You can see that the fall of the gold. So this is the chart comparing this USD index with the gold movement. So in a nutshell, I would say that for this coming 6 months, gold will likely be in bearish sentiment, probably I would say at 1,150. So anything below there is considered a good to buy area, I would say, okay? Okay, next to the trading strategy. So we have a simple moving average technical analysis. And second, we have pivot points. And third, we have a chart, Japanese candlestick chart. And we also have psychology trading. This is more towards common sense based on my experience in Dubai. And then buy low and sell high strategy, very common sense strategy. And then go long term by converting into physical gold through EFRP. And of course, rolling to the next contract. So what I do is I go for the first part, simple moving average. So what is simple moving average? It's actually a technical analysis tool, be able to help you to actually identify the movement of the trend and also to enter and exit a trade. Okay. So it's an arithmetic moving average calculated by adding the closing price of the gold prices for a specific period and then dividing this by a total number of time periods. So I show you how it look like, by the way. Okay, here's the example, for example. You can see that I take the 5 previous closing price of the gold and then divide by 5, and this is what I will get for the simple moving average digits. But if you apply into a chart, it will show you a line of curve. For those of you who are swing traders, usually you will use short terms like 5 to 25 days, but standard will be 10 days, 10 to 20 days for short-term trading for this moving average. If you are more towards intermediate, you can go for 50 to 100 days. And if you go for long term, 200 days will be suitable. 1 to 200 days will be suitable. Okay, this is how it looks like, a simple moving average line. So I have an example of 5-day simple moving average line, as you can see. But what does the line tell us about? I will show you in the next chart. But this is how it looks like. You can see the differences. If you use 5 days, it is very near to the price, the current price. If you use like intermediate terms, a bit far away actually, because it's called lagging indicator. All right, next, let me see. So how to use moving averages to identify the trend direction, enter and exit a trade, and to identify trend changes with crossover. We can see from here. Oh, sorry, you need to take a photo. All right, I shall move on to the next one. Okay. As you can see, this is a candlesticks chart. So we call the live price. Okay. Then we have this moving average line. So this is the simple moving average line. Will tell you the trend and direction. How you look at the direction and trend. First of all, if the price actually trading below, okay, below this line, it's actually telling you the trend is on bearish mode. But if it's trading above the line, it's telling you it's on the bullish mode. And when it's suitable to enter and exit a trade is when you look at the crossover here. Okay, when you see the price here trying to cross below here, give you the signal. It's actually good to sell. But it's not guaranteed sure you make money, but this is the strategy. So what you do is you probably can sell this area, and you can put a stop loss at this area. Always must accompany by a stop loss, usually for me, the way I trade. So, and it's moving down, and then here also giving you another signal to actually buy. It's called reversal on the bullish mode. So you can consider to buy at this area, and then you can put a stop loss over this area. So this is to identify the movement and the trend and everything. Let me show you the next one. Instead of using just one simple moving average line, you also can concurrently use 2 at the same time of different period. You can use 10 simple moving average, and you also can use a 20 period simple moving average. So you have a 2 line, can show you a broader view as well. And this one of the pattern that we can look into would be, if you use the shorter simple moving average, if it crosses above the longer moving average, also giving you a hint that you can actually go long, you can buy. But if you see it's on the reverse, the shorter cross below the longer one, also giving you a signal that you can sell for short term. Okay, let me see what we have for this. Okay, this is for the FGLD chart I managed to find. So actually I use a simple average line in order to give me the trend and directions for this FGLD. Okay, I use Reuters. So what I get is I go for technical analysis. I just enter, and then I go for moving average, and then I go for simple moving average. I click, so it actually shows me this line. Okay, so from here, how do I identify the trend? As you can see, the price of the FGLD crosses above this moving average line, showing you a buy signal. So I can go and buy, and then of course I have to take care of my stop loss. You can see that it's actually go up. And also to sell signal, you can see here, it actually crossed below. So it's giving you the signal that actually on the start to have a bearish sentiments. So it's moving downwards. Okay, so this is how we use simple moving average. I hope it's simple, easy, touch and go. Okay. Okay, next. Just a fast recap. It's a lagging indicator. Its response slower to rapid price changes. it's not just simple moving average. Actually, they have a weighted and exponential moving average as well. But as I said, I don't want to touch in depth. I just want to make it the fundamental one, just to make it easy for you all. So you all can actually go to certain website that provide free charts and start entering the specific technical analysis you all want, for example, simple moving average, and also start using it for your perhaps doing speculations or for hedging purposes as well. Okay, it smooths out the random price movement to see the average price value, and then can help to identify trend directions. And of course, identify support and resistance level. And change in trend with crossover. Okay, this is a simple moving average. And the next will be on the pivot points. Okay, what is pivot points? Pivot points for me is more like giving you an indication of support and resistance, so that you'll be able to know where would the price likely to be and what is the resistance and the next level of support. So how do you actually calculate this pivot point? The framework actually is quite complex, but as I said, nowadays, if you go to certain website, it provides free calculation. You just need to enter the specific technical analysis and the duration. It will calculate the line for you straight away. Okay, but I will still show you how's the calculations. Okay. So first of all, before why we use pivot points, by the way, is actually to determine the support and resistance. Easy calculations, just put in the charts, and then can be extremely accurate and leading predictive indicator as a guide of price actions. And the formula is this one. I know it's a little bit, it's a lot, but I just try to make it simple. First, we have pivot points. Is the previous day high, previous day low, and also previous day closing, and divide by 3. So you get the pivot points, like the midpoint. And then next is called R1, is called resistance number 1. So you know where the price will be on the first level. What is the resistance? Simply by taking the pivot points, multiply by 2, and you minus the previous day low, okay? Then you will get the resistance number 1. Okay, resistance number 2 is by using the pivot points, plus, in bracket, okay? So you take the resistance number 1 minus the support number 1, then you will get the R2, resistance number 2. So how do we get support number will be pivot points. From here you multiply by 2, and then you minus high of the previous day, then you get the support number 1. And also same to support number 2, you take the pivot points minus the resistance number 1 and support number 1, and you get support number 2. Okay, I try to put into figures. So I will use Bloomberg to extract the details from the previous day. So I use the example for 28th of June. Okay, so we have high 1251.17, and the low 1246.44, and the closing is 1250.86. Okay, so these are the data I have. I will use it to compose. But before that, let me show you, even Bloomberg actually also using SMAVG, simple moving average. You see, they also provide this simple moving average digits for us. They have 50 days, they have 100 days, and 200 days. You see, a lot of people actually using this. Okay, with this information I have, so example to calculate using the 20th of June of 2017, this is what I get: high, low, and closing. So I start calculating the pivots points. I take this 3, divide by 3, and then I get pivots point. The mid level is 1249.49, 1249.49. Okay, I will start to calculate R1, resistance number 1. So this is how we do a calculation. The pivot points multiply by 2, okay, and minus the low of the day for the previous closing. And I will get the resistance number 1 is 1252.54. This is the resistance number 1. Okay. And so on, I will calculate support number 1. It will be the pivot points multiplied by 2 minus the high of the, from the previous high, sorry. So in this case, I will get support number 1. So from here, you'll be able to, at least you know where is the support and where is the resistance. So you can actually look at which price you want to enter, and by putting the stop loss there for your speculation, or perhaps for hedging for your own goal. Okay, R2 will be as follow. By taking the pivot point plus and then bracket, you take the previous day high and minus the previous day low, and then you get the resistance number 2. And so do this support number 2 as well. Actually, they have support number 3, and they also have resistance number 3, but as I said, it's too complex, so I just make it simple. I make it until resistance 2 and support 2, okay? But as I said, no need to memorize. Just go to the free chart, free website, providing free charts, enter the specific. We show from here, right? This is how it looks like, the pivot points. Midline, and then you know your resistance 1, support R2, support number 2. Okay, in a normal chart, this is how it looks like. Okay, by taking the example of this area, okay, because these are way long before. So this is the pivot points, you can see from here. So the gold price actually trading in between the resistance number 1 and support number 1. So this is pivot points helpful tools for you. So you can see that when it touch R1, resistance number 1, usually it's very hard to break through. So you all can consider of actually short here, to sell here, and probably you can put a stop loss at R2, okay, depending on your preference. So this is how it's look like for a pivot point. And dailyfx.com actually providing free charts and also free technical analysis, so you all may actually start to go to their website and do some research as well. Okay, I show you how it's actually go there. You see, this is the go chart from dailyfx.com. I just go to the indicators. I go to the technical analysis site, and there are various technical analysis. Okay, so I go to pivot point standard. Next, I go for pivot points. Usually, pivot point is taking the previous day's data, for example, high, low, and also the closing. But you can choose more than just one day. You can go for 5 days pivot point. It will actually help you to compute and give you the line. So this is how we use the pivot point, and I just make it simple and easy as well. All right, that's it for pivot point. And next would be Japanese candlestick. Japanese candlestick, I won't be showing charts and do a lot of elaboration because I found a video clip for about 5 minutes. It explains very well, and also the patterns as well. Just one moment, let me show you. Okay, this is how it looks like, candlestick, the body part and also the shadow. Okay. Okay, I actually read through a book saying that there are about 68 patterns that you can actually trying to spot from this candlestick. But as I said, I cannot explain all the pattern, and also I don't really use all the pattern. That's why this video will explain you 6 types of patterns and also some elaboration on this candlestick. So I hope you will be able to help you all. But before that, I actually found a book in my office showing 8 candlestick patterns that matter. So if you're actually interested in candlestick chart or trading strategy, you can actually go to bookstore, of course, and look for this by Dr. Fu Long Song. 8 candlestick patterns that matters. All right. Okay, I shall start the video clip now. Is it all right to actually dim off the light so that be able to see a bit clear? Oh. Huh? Okay, I just click that it will play. It's from Trading 212 and shall start the
Japanese
right
candlestick chart. Get to know the main chart patterns. You probably think that financial analysis is complicated, but it actually comes down to 2 simple things: reading charts and reading news. There are many types of charts, but Japanese candlestick, or simply candlestick, are the most popular ones. Such a chart consists of red and green candlesticks, or candles, lined one after another. Each candle gives you detailed information about the price movement within a specified time interval. In fact, Japanese candlesticks are the best way to visualize the ups and downs of a price so that you can spot potential opportunities to buy or sell. Let's take a more detailed look. Every candle consists of a body and 1 or 2 tails called shadows sticking out of it. The body indicates the range between the open and close price for a specific time frame, and the shadows represent the highest and lowest price levels reached for the set interval. Japanese candlestick charts are easy to read. A red candle shows that the price is going down, and a green one represents an increasing price. If you're looking at a 10-minute chart, each candle represents a 10-minute time interval. We see a green candle when the open price is lower than the close price. If the price closes lower than it opened, then the candle is red. As simple as that. What kind of signals does a candlestick chart provide? It's no surprise that candlestick charts are so popular. They're excellent for spotting market turning points. By looking at the patterns that candles create, you can often guess if a certain market is about to continue in its current direction or reverse it. Patterns that show that the market could change direction are called reversal patterns. They could be bearish, ones that indicate the change from an uptrend to a downtrend that should be perceived as a signal to sell. Or bullish, these show that a price that has been decreasing is likely to start going up and we should buy. Let's see the most popular candlestick patterns which encourage you to buy. Bullish engulfing. The bullish engulfing consists of a red candle followed by a bigger green one which fully engulfs the red candle. The pattern is an indication for a market turning point. In simple words, it's likely that the market may start going up and you can buy. The indication is even stronger if the green candlestick engulfs 2 or 3 red candles. Hammer. The name of this candle is pretty much self-explanatory. You'll recognize the hammer by its short body, lower shadow that is about 2 or 3 times the length of the body, and a shorter upper shadow, or no shadow at all. The hammer is usually a clear indication of a declining price reversing its direction and starting to go up, so you can start buying. But just to be safe, you could always wait for additional confirmation. Such confirmation is a green candle closing above the open of the hammer, for example. Morning doji star. This pattern appears when there is a slight market movement and consists of 3 candles, a red one, followed by a doji, followed by a green candle closing beyond the middle of the first candle.
Oops. Sorry for the interruptions. Let me fix it.
Of the open of the hammer, for example, movement and consists of 3 candles, a red one, followed by a doji, followed by a green candle closing beyond the middle of the first candle. To observe your charts carefully, and you'll soon learn to spot patterns as they form. For more free trading tutorials, check out trading212.com.
Alright, I'm making an advertisement for Trading 212 as well. In fact, they actually have a lot of technical analysis, so you can go to their website and check it out. They even have simple moving average as well. So those are the technical analysis type, more onto charts and also the moving types. So I go for the common sense one, the psychological trading. All right, let's back from the video clip. Now I'm back to the strategic trading on psychological trading. This is quite common sense because when we talk about the greed and fear, everyone also know, right? But actually it's different. So I would like to actually share my story. This happened to me. Okay. How do I say about psychological trading is, when I was in Dubai, right, actually I resigned from my previous company. So I actually was a free trader at that time. So I thought I have about 6 to 7 years experience, and I thought I'm good enough to make good money. So what I do is I open an account and I do trading. That was in the January. you see the chart, right? The gold price actually was at the lowest, around 1,150, and slowly on progressively upwards to the highest. So actually what I did was, I actually tell to myself, I said, I'm going to buy, I'm going to go long and wait, okay? I'm going to wait to reach 1,200 price. So I actually entered long, but even I myself, I also have the fear, you see. When the price actually go down, you see, before it actually went up, it go down. And I got scared off because of this. So what I do is, I sell off my position, and then I do another sell again. And then thereafter, the price move up again. What I do, I buy again, and I rebuy again, close my position, I go long again. Ongoing this for 2 days, at the end of the day, half of my capital actually gone. So this is what I call psychology trading. I even cannot control my own fear and emotions, as I have a 6 to 7 year experience. So this is what I'm trying to share with you all. First, this strategy is to control yourself first. Even you have all the powerful tools or technical analysis tool, but if you, like me, then I don't think it will work. So this is one of the important to take note. Because panic decision will always cause losses. You lost from the spread itself, not because the price moved way low or way up. It's because all the spread in between, in and out, and also the commission, half of it gone, and I stop and I take out my money, no more personal trading. But when I work with my company, I have discipline. I use strategy like stop loss, and I can wait, and I make good money. But when I do trading for myself, the fear come in already. So that's what I'm trying to share with you all. So this is what I call one of the psychological trading. And next is also a very common sense one, buy low and sell high strategy. Also happened to me. When the price actually shoot up, any one of you actually will actually to sell, or you do the reversal, instead you buy. But I think a lot of us are also having this psychology matters, that when the price shoot up, you don't take advantage of high price, you actually end up you are buying. And after you actually bought, the next minute it came down, and then that's it. You make a loss from there if you put a stop loss. So this is about buy low and sell high strategy. I know it's really common sense, but if I don't mention it, you all may not know, but you all might didn't really go for this strategy. When you see there's opportunity at high, just try to sell it. Of course, with in a responsible way, put a stop loss, okay? Let me move on to the next one. Will be the long-term and physical goal. Okay, with this introduction of EFRP, so investor can actually go for long-term by converting into a physical goal. Let's say you actually have bought some contracts right now, and the price actually, as I said, this coming 6 months will be more onto bearish sentiments, so I expect price to actually go down. So if you actually have bought, you go long, right? So you may, if the price go down, so maybe you are losing, right? So instead of losing, what you can do is, rather than just rolling to the next contract, you can actually convert into physical gold and hold it and wait longer time. So you are not vulnerable to price spike or margin call, or maybe your margin could be taken over. That's why you can go for this. But in control the quantity, because if you go for physical, like 10 kilo or 20 kilo, actually it's a huge amount of money. Okay, next one is lowering to the next gold contract. In Bursa, they have a lot of contract. They have July, August, and so on. So that it gives you the opportunity to hold longer. You can roll longer. So let me show you how it looks like. Okay. I snapped this is on June. That's why you can see that there was still this June contract. But actually, June already passed. So by right, you shouldn't have June already. So this is how it looks like. This is JTrader platform. I'm not sure if you're all using Philip Futures. Okay, let's say I have sold at 170 ringgit. Okay, let's say now approaching month ends. Which means the cash settlement, it will actually tally my sold price. So I might make a loss of 2 ringgit. So what I can do actually, I try to buy now. I try to buy try to close my position. I buy, and then I open a new contract in July contract. Sometimes you can get slight advantage actually. As you can see here, July contract, if you want to sell, is 172.10. If you look at August contract, they have 172.5 sometimes. This is the bid and ask in the market. So sometimes you can get slight advantage by closing the contract in June, then you go for August contract, you sell at 172.50, you gain slight advantage of 50 cents. While you gain slight advantage of 50 cents, you can still continue to wait the price to go below 170 ringgit in order to make it break even or even go lower to make more profit. So this is what I meant by rolling to the next gold contract. At the same time, you also can take slight advantage. But of course, this is not always. Sometimes you actually, it's the reversal. You have to actually pay a little bit more, which means you lose out on the spread in order to roll over. But it gives you the opportunity to keep waiting to hit your required price. So this is the good side that you can actually wait longer for the futures contract. Okay, so that's it, just to make it simple. So we have covered gold outlook, French election, US policy, geopolitical tension, US economics, as I have explained to you, and also the coming interest rate hike, and also the coming FOMC meeting. You all can actually take note of that. And the US economic projection and global economic projection. Importantly, it's the 3% of GST from this India side and also the USD index. And technical analysis side, as I mentioned just now, more onto psychological, and also simple moving average pivot points and candlestick chart. And this common sense one, long on the go, and then FGLD and lowering to the next contract. So thank you for your support. Really thanks, because I know I'm not really doing well. I try my best, okay? Hopefully next time I can do better again. Yeah. Thanks. All right, any question regarding on the gold outlook? Okay, let me see. Anything to share with you all? How about FGLD? Someone actually asking about the spread, right? About the bid and ask spread. Anyone actually asking? Shall I pass to you, David, so that you have proceed with your question as well?
Okay, let's give a round of applause to Kim. I know he tried his very best. In fact, it's a very good job. I'm not sure you're promoting this book as well. Okay. But actually, I have a question for you, Kim. Since no one asked, I wanted to ask you, do you maintain a Twitter account? You know, like Donald Trump, he has a Twitter account, right? Whatever he tweets, he moves the market. So do you have a Twitter account? If you have, maybe we can follow you. So tell us the direction of go. Now, just to add a little bit on Kim's presentation, you know the period points, one strategy that he showed us. In fact, I think in Philip Futures, we offer our daily commentaries. In our daily commentaries, we have a daily period points as well for your reference. So, just for a bit of sales pitch, if you want to know, instead of doing all the manual calculation, why not open an account with Philip? You can get all your daily commentaries, and all there you have all your period points. Okay. Now, I think we almost come to an end. Any questions for Mr. Kim? Anyone? Yeah, one last question. What's your view on gold, Kim?
We wouldn't rule out any possible crash in the future because right now stock actually at quite high. I heard some of the news saying that if there's a crash in stock, perhaps you can see the gold will shoot up to probably 1,006 or 1,007, probably 2,000. But I'm not going to make it like way high figure. And also possible if there's any issue related to euro or maybe any war ongoing, perhaps you can look at next year perhaps. More onto the bullish, but this coming 6 months, I would say at 1,150 area, I would say, okay. All right, as of yesterday, closing price was 1,213. All right, thanks.
So if you, based on Kim's recommendation with disclaimer, you know what to do, You can short at current price and you wait for 1150. Okay, it's next 6 months. He's giving you the timeline. I'm not sure whether Busa agree or not. Busa agree? Okay, so we come to an end of our event today. Just give a round of applause for yourself. Thanks for making it. Again, a few housekeeping, which I like to mention. Each of you will have a feedback form. It's very important that you state your feedbacks for our event. We appreciate your comments, whether it's positive or negative, we both appreciate. And keep in mind, next week we will have another session. It's not on goal, it's on technical analysis. It's a full day event at Busan, Malaysia. If you are keen to participate or keen to register for the event, just indicate in your feedback form, or you can even register directly with my colleague outside. Okay, again, those who are having parking tickets, please get it chopped. If not, you are seriously paying a bomb. Okay, with that, thank you very much. Lunch is not ready? How long it needs? 10 minutes? Oh, 1 hour? 10 minutes. Okay. Unfortunately, I think those guys are still preparing. Okay, maybe Busa wants to say something.
Next week, if you can, do take the opportunity to attend the technical class, because Busa pay for us, for trader from Singapore to come. Okay, we paid for the Singaporean to come and share with you guys some technical analysis. So that is an experienced trader. So he would be able to share. Sorry, I'm holding my cup. Okay, he will be able to share quite in depth with you all on the technical part. Okay. His name is Gerald Tong. I'm not sure whether you have heard of him or not. Okay? Pardon? They have the outline, so we are doing with Philip, so to educate Philip's client on the technical side. Okay? So if you can, next week is a good day to come.
Okay, since while we wait for lunch to prepare, I know you guys are looking at me like I'm the food like that. So just to recap what we have go through today, early in the morning, Busa is very kind enough to share on the FGLD contract. You have not on it, get it ready. I agree with Kim, buy low, sell high is the way to go. Buy physical. We have always as Ace Capital as our partner. I'm not sure whether did you guys bring the real gold? You can let them show. I don't think you guys dare to bring, right? Okay. Anyway, Mr. Fong and Mr. Kim, they are around. Anything related to EFRP, we are very happy to address any of your questions, both from Philip as well as from Ace. If any questions you have on FGLD contract, again, I think we have Mr. Andrew here from Bosa. I think he could also address any of the issues you have on FGLD. Okay. Now, a quick recap. EFRP is something that I think Exchange, working together with the brokers and also working with the vendors to really push it to the market. It is something that you could consider as an alternative, whereby if you're holding futures contract, you think that, hey, it's also good to hold it in a physical, there is a way, okay? So even though it's a cash settle contract, but you can opt for the EFRP, okay? You want to know further, you can always ask us. Okay. Now, I think there's a couple of outlooks. I think both myself and Kim is kind of agree that short term looks a bit bearish on gold because the interest rate cycle is going to go up. Okay. You can always look at the dollar index against gold. There will be a relationship there. So short term, a bit bearish. Bearish. What do? If you are holding gold, you should go to a futures market and hedge FGLD. Okay. If you want to take a speculative position, you can always go to the gold market and short it. Okay. FGLD contract. Okay, but over the medium to longer term, I think both our views coincide. We are looking at higher prices for gold over the medium to longer term. So this is another opportunity, a great opportunity. When the time is right, you only can do two things. You can short it or you buy when it's low enough. Okay, and sell it when it's high. Okay, now hopefully things are there. Any questions? Quite a shy audience. Yes. You want to hear from me or you want to hear from Kim? Both. Busa cannot. Busa we must respect. They are very neutral. Or Andrew, you want to have anything to say?
Usually, when I tell people, share with you this personal experience, when I tell people I work in Busa, first thing people ask is not what you do. The first thing they ask is, any tips? Okay, that is because you see when we work at Bursa, whatever we say, people think that it's insider trading. Actually, that's why people always ask Bursa, do you have tips? First thing, it's not whether you are married, whether how old are you or anything else. First thing, any tips on stocks? And Bursa usually don't have any tips on, okay? Because at the same time, we are business people, we are also the regulator, okay? So whatever we have is, we don't have tips. That's confirmed, okay? It's like you are telling, like they're expecting me have some connection with the syndicate to push up the price or whatever, not, we don't, okay? You are like asking the policeman, where is the thief? Or asking the thief, where is the policeman? Something like that, huh? So Bursa do not usually tell you the price. Because whatever we say, you will think that it's insider trading, we're sharing insider news with you. So we don't, we can't. That's why we have Philip, we have Kim here to share with you what is their view, okay? Bursa don't have view, we can't. Because if not, you'll think that we have insider trading, like Maybank, got something happen, that's why we tell you price go up or whatever. Actually, we don't have, okay?
So going back to that question, it's a good question. I say, Andrew is always pushing the pressure to me, not to Philip, but to me, okay, to address Philip's view, why we are a bit more bullish in the mid to long term, not a bit, but rather very bullish, is because I always have this analogy, personal analogy. When you are trading on a calm water, do you be more cautious or you be more comfortable? Usually, when you're trading in calm water, like what you're witnessing now, you look at so many other market sentiment indicators, your wicks, your options, put options, they're all at all-time low, indicating that the market is all good. But ask yourself honestly, with the things that's happening, the things that are looking around, political tensions everywhere, Malaysia also have geopolitical tension, okay, mind you, at home. That's why FGLD is a good way to hedge, okay. I think sooner or later this will overblow, okay. You see how government policies, monetary policies are working. Is actually most of the time is pretty much in favor of gold. People are talking about currency war, just about 2 years ago. Currency war in the sense that, hey, the US dollar going to attack yen or yen attack RMB, To be honest, personally, it won't happen, okay? But as a trader, or whether may not be a trader, but investor or fund managers, you need to park your assets at certain point in time. So it's a matter of shifting allocation from equities to a precious metal. The time will come, but what triggered it? That really beats me. I wish I can get the answer, but I'm hoping that over the longer term period, medium to longer term period, this kind of things will start to get worse. When it gets worse, what will you do? Probably you'll contact Philip or contact Ace, hey, I want to buy gold, okay? But when good times are already, when bad times are already over, global financial crisis, people will not be interested in gold anymore. No matter what I talk here also, you won't be interested. You'll be interested in other asset classes. So that's how we form our view in the medium to longer term. But I think Kim might have a different view because he's a trader. He trades the market. He offers prices for the market. I'm surprised you guys didn't ask much question to Kim. You should really crack his brain because he's an actual trader in the market. Unlike us, we are just storytellers in the market. Okay. So Kim, maybe to you on this question.
Hey, thanks. Regarding on the short terms and long terms goal, right? What I say short terms is on the bearish sentiment is because the fact that I have shown you just now, because of the India side, because of the inventories, it's not easy to actually dispose of in such a short duration. That's why I say within these 6 months, plus the gold price actually become more expensive. Okay, and also the tonality from the FOMC, their projection is the interest rate. It's really scaring people. So people just want to sell off right now. But as I said, when I say long-term wise, it's because there's always opportunity buyer outside. Those kind of traders, day or night traders, those inside their room waiting for such a news to happen, any tragedy news to happen, they will click the buy button. This why we say long terms. Yep, this a bit more simple on my views. And thanks for that to the market. That's not the way we do. So this is our company policy in order to maintain the growth, not by speculating or doing speculations. So this is the way what we are doing. Even in my previous company, we also have the same principle. We don't go naked in the company. We always hedge against our position because we are bullion trading. We do physical gold. That's the reason. Yep. So yes, sorry. Okay, if in a speculator point of view, as I said, I don't do speculation, but I always look at some of the news from some of the website. They will actually do decipher the statement from the FOMC, whether it's hawkish or bullish. As long as there's an indication of, let's say, hawkish, which means aggressive, they will raise interest rates or possible gradual rate hike. So what I do is I will short it, okay? Of course, after, because before it's like taking risks already, it's like gamble. You know, it's good, then you win money, not good, then you lose. So after, okay, although the price may have moved a distance, but there's still room to go further, either upwards or downwards, or perhaps weekly. Within that particular week, it will be so-called, the sentiments we call bullish. So most likely the price next day will go higher, especially because I usually trade in US time, it's around midnight Malaysia time. But in the morning time is our Asian time. So they actually tend to push up the price higher sometimes. That's why when always in the morning, 9 o'clock, I go to office, I open my gold price, spot. The price always tend to go up $3, $4, so-called the intraday high, then okay, come back down in the mid, and then depends on the news at night. Okay. Yesterday, there was this non-farm payroll news from US every Friday, every first Friday of the month. So yesterday, news was quite good to the US economy as a whole. That's why yesterday price actually came down to the lowest of 1,208 from 1,225 yesterday. So yesterday, if I were to actually to play with the speculation things, I would have sold, I would make money, but this is not my strategy here with this company. So I, look at it and, in my heart, I win but not the real money Yeah. Yeah. I'm sorry. Yes. Any more questions? If not, I pass back to David. All right. Thanks a lot.
Just one final question, Kim. Don't go first.
Right.
Just share with the audience. In honesty, do you actually make money?
No, you mean what? In terms of what? Personal trading, or I actually lose a lot of money. I do personal trade. As I said, when I do resignation from my previous company, I get a big sum of gratuity. Okay, because in Dubai they pay in gratuity. So I was like, wow, I'm going to make more. But at the end, as I told you, the psychology things, I couldn't believe that I myself lose so much money. So I stopped. Okay, there must be a stop for this. But if those of you who can control the emotions and have tremendous experience, perhaps you can really try out FGLD. It's really, how do I say, it's like alternative options for you all to go long or go short. Of course, with stop loss, okay, must with a stop loss. Because gold spike sometimes can be crazy, like overnight, $100 up, boom. Yep. And you know the consequences as well. Yes. And any more questions from David's side? Yes. Yes. All right. Okay. To be honest, I only use moving average line only, but I also use pivot point sometimes. I just want to know what will be the daily support and daily resistance, because when someone, okay, we are not just buying gold, okay, we actually sell gold as well sometimes. So when sell gold, which means I become short, so I need to buy at low. So I need to find out what will be the resistance, because if the price actually go up, at least I know what will be my level. I'll be able to sustain the loss, because if not, it continue to go up the resistance, I have to cut my losses. So I will use the pivot points. It's a very good indication for me, because it takes the previous day high, low, and also closing price, and then they become what will be the resistance and support. So that's what I'm using. But I don't really use candlestick, although my chart have candlestick pattern, but I didn't look at the pattern because those are more for speculators. Mine is more like to hedge against any losses. So I always put a stop loss. So it's not suitable for this candlestick. Although there are others like relative index, RSI they call relative strength index, something like this. Is related to overbought and oversold hints, but I don't really use that as well. But I heard this is very famous also to some of the people, they use it. Yeah. Yes, my chief marketing officer, you have question? You want to say something?
Yeah, on behalf of all the friends in the room, I wish to ask as an investor, myself,
All right.
instead of representing the company,
All right.
how do I start to do FGLD? I mean, of course, I opened an account with Philip first. Okay. Then subsequently, I have like, my wife gave me 5,000. And then my wife asked me, you make some money back. So how do I do?
Sorry, you mean to open account, is it? Okay, so did you get any advertisement free from Bursa for asking such a question? So you mean you want to know how you open account or what? Because this one can be done through Philips.
I want to know
How to make money. Okay. There's no definite answer for this, but as I say, by using the correct strategy, first of all, look at the market sentiments, okay? And is it at the low level or at the high level? So if you actually sell at the high, then probably wait and put a stop loss at the high. But usually, I don't think FGLD can put a stop loss, right? Can? Okay. So as a market maker, I would definitely take your stop lah. No lah. This is no, it's regulated. I mean, it's regulated. It's fair. It's not like I want to take the stop. It's regulated. It's based on the standard price as well. But as I say, I don't have any specific tips to make money. If not, I won't be standing here. I'll be the one who's sitting and listen to other guys speak about this. Correct or not? But it's more on how you actually responsible in a way, how you trade for yourself. Yes, sir.
Maybe the white jet. Go ahead.
So right now the price is what?
As of you mean for the global gold price? As of yesterday, closing was around 1,213.
Okay, so you were saying the bottom could be 1150.
Yeah, I was expecting at 1,150 in that area. So anything below that is worth the buy, is considered good to buy, or maybe good to convert into physical gold. As I say, if there is a single crash, it could push the price higher. But you need a lot of reason to actually make the gold price to come down. You see, you need this interest rate, you need this India GST things, or maybe other reason to slowly on the downwards. But when up, it's like, okay, when go upwards, it's like a second. But when go downwards, it's like you takes an hour. You see the differences? Yeah. Yes.
I want to know as a market maker.
Okay.
Can you review how you set the market opening price?
How I set the market opening price. Am I allowed? Because as I said, I'm a market maker. My responsibility to ensure the market liquidity. Okay, liquidable.
Because you see, because sometimes I just quite very curious that market opening get up, get down.
It's because
what kind of criteria you put in to decide whether today the price I could get up or I could get down. On the opening price.
sorry.
Price usually, okay, if I'm not a market maker, but you see, COMEX gold trade 24 hours. Yeah. So at night, gold price would have moved. So when opening for Malaysian price, it will be impacted by the closing of COMEX price. So people would take into consideration. That's why everything, when you treat Asia time and US time, there would be a gap up, a gap down at the US, at the Malaysian time, because it reacts to the US market. So it's not how he determined. It's more like
The bid and ask.
yeah. So it's more of looking at the other market as well. So it's not what he wants. It's whatever he quote, if it's out of sync of the market, people will not take. People will not buy, will not sell.
Okay, and sometimes I don't quote as well. Sometimes the market quote itself, the buyer and seller, they quote itself already. So sometimes what I do is I want to fulfill the B and R's, if it's within the perimeters of the standard gold price. But sometimes it's actually a little bit different from the gold spot price because you have to take into consideration of currency, okay, and also the sentiment of the currency. Because if the USD is on the bullish, the gold price for FGLD will be different. It's more leaning towards the bullish mode. So more people would like to, buy rather than sell. Okay, so in this case, you can take the opportunity to sell. You can take the opportunity to sell. You sell with a higher price actually, but that's the risk because although you are not exposed to USD, but the price itself actually affected by the USD movement. So this is the one that I have to take into considerations. Yeah.
Perhaps maybe I would add in a word since the exchange is here. Perhaps FGLD should look into a T+1 session, continue overnight. So it makes more sense for, this is public opinion, don't take it from Philip. It makes more sense for a general trader to be in line with the US market. Because generally our market closes at 7. A lot of action happen after 7. Yeah. So perhaps, maybe Busa can look at it, I don't know.
And perhaps some of the new investors can reach out to Philip and try out the FGLD as soon as possible. One lot first, try with one lot, yeah? Yep, good, All right. Okay, I'm not a promoter, so I don't want to keep on saying all this.
Okay, last question, Yep.
In your opinion,
All right.
what are the main factors to influence the market price?
In terms of FGLD or the global gold price? Global gold price. What are the influence? You see, first of all, we look into the most basic will be the demand and supplies in the real market. Those really go for physical, okay? Second, we look for paper trades, those speculators, okay? Those hedge funds, those personal traders. You know, sometimes it's not because there is demand for gold, the price go up. It's because the speculators, they buy a lot of huge contract to push up the price. And some of them actually hedge against inflation, hedge against uncertainty. So those are the factors that come in as well. It reflects to your questions. Yeah. But one important to take into will be the hedge funds, usually in the US. This is what I did. I mean my experience when I was in Dubai. Usually when market opening is around 4:30 p.m. Dubai time. So we always look at the US market. We actually realized that when the US market open, the price tend to move very volatile. So it's more reflect to hedge fund. I think they're actually trying to short and then make us scared, and then we also continue to sell. At the end, at the low already, they actually buy back and push back up the price, and then actually, I mean, this is not a substantial fact, but this is what we actually assume from our boss side before, okay? And also stock, one of the important thing, the great fall in 2013 because my ex-boss told me that a lot of people take their money out from the gold, they sell at the highest, not the highest, at very high level, around 1,700 plus. They sell the gold and take the money, they pump into stock. Yeah. So right now I heard that stock actually is quite at a very high level. So I'm not sure if it's continue be able to sustain or not. As I said, if there's anything cause the stock to crash, expect the gold to go above 1,005 at least. That's the minimum point, and it could even go higher. Yep.
Okay, so now you know what you need to do, sell your stocks and buy gold.
No,
okay?
no.
Okay, we come to an end of our event. Sorry to hold you back because we're preparing for lunch. Just a few things to remind again. Let's give a round of applause to Kim, Andrew. Okay. A few things to take note: feedback forms and parking ticket. Okay, so now you guys can proceed to the lunch. The lunch is served behind. Yeah.